in the beginning, what you're going to find is you're going to find that your gut is going to be wrong a lot. And when you got butterflies and you're scared to death, you probably should be buying. And when you're happy and everything's going great, you probably should be selling. There's a crossover that happens. At some point, you become a professional. You're doing this long enough, using the right principles. You get this down. You get consistency. You're doing the right things. You become a professional at this. And all of a sudden, fading your gut doesn't work. Your gut actually becomes correct. And when you feel good, it's time to buy. And when you feel danger and the hair in the back of your neck stands up, it's time to sell. And again, there's that crossover. That's when you sort of have developed into a competent trader, where you truly now know what you're doing. So to get to that point, you got to make sure that you're always keeping yourself honest. That's what it's all about as far as the numbers, is keeping yourself honest. See, I don't have to keep myself honest anymore. I'm honest with myself with trading. It's standard operating procedure. A drill sergeant or, someone who's been in the Army, in the military for a career doesn't have to go and look at the rule, the rule book to know standard operating procedure. They got that down. It's been drilled into them to where even after they leave the military and go home, it's hard for them to not do things in a certain way because they've been so, they conformed for so long. That's sort of how this is. But to get to that point, you've got to do a lot of work, and you've got to do a lot of introspect and really see where you're going wrong and where you're going right. Both. Don't just look for where you're going wrong. Try to catch yourself doing things right too, because that's real important. And that's where that journal comes in. So, but yeah, I haven't journaled for several years. It's been a while since I actually journaled.
Dave, I don't know if you could jump in there with any comments you have about trading journal.
About what? I stepped out for a second.
Trading journal question being asked.
I think I think it's important. I mean, you don't have to write every day, but I think the most important thing is to screenshot your charts, save your charts, print them out, write them up, and then go back and study them after you sell them, and also print out a chart when you sell them, so you can do a post analysis on your trades. That's where I learned where I was making all my mistakes. And this entire program is great, and it saves a lot of time in showing you what to do. But you've got now all the information you need, and you just have to start using it, and you have to start learning from your own mistakes. And that's where you're going to learn more than you are in this course, because you're the one who's trading, you're the one who's making the decisions. And so I think it's vital that you at least go back and study what you've done during the past 6 months or the past year, so you can see if there's patterns that have developed where you're making more of your mistakes. So it's if you just take what you've learned here and go and start investing in the market and making money and losing money, but never studying where you're most profitable, then it's going to be a waste. I think you have to now take it and learn from your own trading of what you're doing right and what you're doing wrong.
Yeah. And that trading journal, when you bring that into, like I talked about in post-analysis, when you do that post-analysis and you have that trading journal and you can look back and see, what you were feeling at that time and thinking and so forth, it definitely helps. It helps. And it really helps if you do all that work and then you come back to those trades later, after you've been out of them for a while. And even your journal notes, you'll read them and it'll be like you're a coach to someone else's trading. And that's where you get really objective.
Yeah, and sometimes you can go back and look at a stock that you bought and you go, what in the world was I thinking? And that's what's so good about when you're buying a stock, to write down the reasons of what you were thinking and why you bought those positions. Because if you don't, sometimes you're going to go back and go, did I really buy that there? I must have been crazy.
Yeah.
Just to add a little bit of color from kind of my own, some of the guys, especially on the service, know like I don't care for financials at all. Well, it's because I've looked at my record in trading financials is just terrible versus technology. Well, when Mark says your biggest winners come from, say, a group like technology, and that bears out in the weight of evidence of my actual trading over years, hundreds and hundreds of trades. Now, when I see a financial setting up, even if it sets up, I usually just pass because I go, my cash is better spent waiting for a group that I've historically done better in. And the irony was, like I was saying before, when I looked at my best trades, most of them, if they were above average winners, had either earnings or sales. And the only exception to that was the biotech group. And that was after 5 years of trading, not 5 weeks, a legitimate data set and a big study I did.
Here's a perfect, just real quick too, Dow's up 238 points, and again, we've got some of these names here coming in here. RVLB is now down 6%. Airbnb down almost now 9%. Got some stocks just, we saw a few of these practically imploding. You're all over the place here. And again, just get off that Dow. If you look at that Dow, that might make you think you should be buying something, but now I don't care what that's doing. It means nothing. I'm looking at these stocks. I'm looking at open positions, my buy alert list, whatever I'm holding. How's that acting? That's your best guidance. And then do post analysis and take a look at if you followed your plan, if you make good decisions, reevaluate, come up with a new plan, come back in, do the same thing, rinse, repeat, same thing over and over. Just get great at analyzing these individual stocks, and then also make a decision and as to what you're going to sacrifice. So here's a perfect example. Like if you want to play Airbnb for a big move, well, then you're going to have to go through pullbacks. You're going to have to give back the short term. Even this first move right here, you went through this pullback, right? So I don't know how big that was. Let's see. That was about an 11, 12% pullback. So you had to give back that. Now, we don't know. This came back up, but that might have just came straight back down and ended up stopping out at break even. You don't know that at the time, right? In order to get that bigger move, you're going to have to go for that pullback. Now, on the flip side, stock breaks out and I sell it right into this move, right? So I sell it, breaks out here, goes up 20%. Great, 20% in 4 days, 5 days. That's a great rip, right? Okay, but then the stock keeps going and doubles over the next 3 months. Now you're kicking yourself. Well, you have to sacrifice. You got to make a decision. If you want to try to do both, well, then you can sell part of it, and that's one way where you short-term trade part of it and trade around your position and hold a longer term on the other part. That's a little bit more advanced, but that's the way around it. But the bottom line is that you've got to sacrifice. You've got to define yourself. You got to define your operation. You start a business. There's a certain way you operate. You don't all of a sudden change the whole business plan every day based on, because a few customers come through the door and ask for, a different product or something. I mean, maybe over the long term, with a lot of information, then you make a big change and you commit to that. But you're again, this is the same as any other business. You got to treat this as a business and set up shop and have your rules and your guidelines and be consistent, and it'll pay you like a business. What time is it here? 12:21. Okay, so we'll get to Arusha in a little bit. We'll do some Market Smith training.
Mark on NUE.
And Arusha, whenever you're ready, just let us know.
Okay, yeah, just let me know. I'm free now.
Okay.
Mark, NUE, that your new core, were you having any concern with the overhead supply from late August, September?
No. I mean, this is a spot where, like I said, this is where it should pull. I would have concern if it didn't either take right off here or build a pivot and hold up and build this base out If it fails and it starts coming off here and I get a pivot failure or worse, a base failure, then I would have concern. It's how it acts going into this overhead supply. This supply is a little bit ways away. Okay, let's draw the line. So is this significant supply? No. And why? Because first of all, let's measure the depth. This decline is only about 25, 26%. So this isn't a huge decline. It's not like it's down 60% and you have tons of trapped buyers that are down gigantic, and you're going to have all that supply as far as the depth is concerned. So that's normal. So this rally back, and as it goes through these pullbacks, is washing out some of this supply. The other thing is around the highs, what is actually supply that you can immediately see at that price level. You go back over here, it's only traded above that level for a couple weeks, and it's several months back. So you have to look at the depth and the distance. Right? Depth and distance. So if it's super deep, well, then the distance needs to be further away. The deeper the correction, the further you want to see the left side and all the supply. So if you have immediate, that's why V-shaped is bad. The reason why V-shaped is bad is because it doesn't allow the stock time to go through that process of wringing out that water. See, again, this isn't just magic, right? This isn't just where V-shape doesn't work because everybody looks and they say, oh, V-shape is no good, so it's the cause. No, it's the effect, right? All this is the effect. So V-shape means that it comes down and it comes up very quickly and doesn't give time to weed out that supply. Very quickly, if it moves up very quickly, you've got these quick short-term profits that people bought off the lows, and you've got this supply that it's coming right back up into where you've got a lot of trapped buyers. So you're going to get a confluence of a lot of selling there, as opposed to if you go through a long period of down and backing and filling and going through, it rallies and it pulls back again. See, every time when it turns up, that gets people hopeful. And then they start selling and that pulls it down a bit. And now those who maybe bought at the lows are, oh, my profit's slipping away. So they sell and now they're knocked out and we get out some of that supply. Now it turns back up. That whole process happens again. And it just keeps getting less and less and less supply until you've weeded it all out. So now time being down here, the longer you're down, the more you wear out. You wear out the short-term or the bottom fishers because they're not at a profit. And if it comes down and undercuts those lows, you're going to get those stops hit. These people here that were hoping for the stock to come back, it doesn't come back. It's sitting down there day after day, week after week. Now they get worn out. They start selling out too. You start eliminating that supply. See, it's all about eliminating the supply. This is the most important concept that you could possibly understand is the law of supply and demand and the concept of supply diminishing, the supply not coming to market anymore. And that's what we're trying to determine. We're trying to determine the point at which supply has come way down and there's very little supply, but you've got institutional demand for the stock. So now with big demand, little supply, explosive price action. That's why these stocks can explode out of these buy points because it's just a simple supply demand equation where it intersects at a very favorable demand versus supply.
And on a similar, and by the way, Mark, something I learned this year from my 12th Master Trader program is you sharing how long it took you to learn supply not coming to market from Bill O'Neill. I thought I was the only one.
No, you're not the only dunce in starting off. We're all dunces. We all start off as a dunce. Just remember that. Okay. Nobody starts off doing this right out of the box. And if they do, they usually give it back. David Ryan, you won the U.S. Investing Championship several years in a row and then cut your account in half, right?
No, I started in 82.
You start off that way.
And I doubled my account from 82 through like June of 83, then gave it all gave my most of that back and then more. And that's where
so you doubled your account. So it's even worse. You doubled your account and then gave it all back and even more.
Right. And then I studied what I was doing wrong. And that's when I turned around my performance starting in late 1984, and then entered the U.S. Investing Championships, I think, for the next 5 years. And
we all start off as a dunce. All right. And David, what I think the point I was trying to make was that you had that initial success, but you didn't have the rules yet. Sometimes we get that success because we're in the right place at the right time.
Oh yeah, I didn't know what I was doing, and I just happened to be in the right place. I started at William O'Neill and Company in like April of 1982, and then the bull market exploded in August of '82, and anybody could make money. But then I kept on buying stocks that were too extended, and then that's how I got chopped up. And you know, I was there, you know, I was in William O'Neill and Company, but the book hadn't come out yet. Bill didn't sit down with anybody and say, this is what you buy. Can Slim he was talking about it, but it wasn't. I mean, you have so many resources out there. Now it's incredible what you can find on the internet on how to do this. Yeah. I mean, plus Mark's courses and his books and such.
Yeah.
Even though I was there working at the company, it wasn't laid out like it is, like it's laid out for you. And so I really had, I mean, I really had almost, I don't want to say learn on my own, but it wasn't as easy as being within that company.
Kudos to you, Dave, because I did have Mark teaching me and telling me. Even though I didn't have books, I didn't have videos and Master Trader Program courses, but that's how hard it was for me to get this.
And guess what? I couldn't save Bob from himself, okay? And William O'Neill and Company couldn't save Dave from himself. We could not be, and I couldn't be saved from myself when I first started because we lacked the experience. We lacked the discipline. We just didn't have the experience yet, even though you get told the knowledge is there. Maybe you read the books, but you've got to gain the experience. So don't put too much pressure on yourself and think that you should come out and right away be this super performer. It just doesn't happen that way unless you're, you know, a mega genius like Mark Ritchie.
That is not true.
And on that note, Mark, obviously, since I deal with all of you every day on a daily basis, talking to members and potential members, you know, that's one of the people who want to learn this. It takes time, but imagine the same thing with the expression I use all the time. A parent teaches a child, don't touch the hot pot, don't touch the hot pot, don't touch the hot pot. What does the child do? They touch the hot pot. So half of the people that we work with, of course, have to get over themselves to even realize, okay, I know nothing. I really do got to start absorbing this stuff. And that's the ego, which is where my famous tagline that I've learned from Mark is, do you want to be right or do you want to make money? And I didn't understand that for a long time. But when it finally clicked in, I realized to make money, don't reinvent the wheel, just follow the proven system that's already existing for you to learn.
This may sound crazy to some of you, but I think one of the best things that this program does for everyone is exactly what O'Neill and the seminars that I went to and when I first met William O'Neill did for me. When I first went and I met O'Neill, I immediately realized how much I sucked and how much I didn't know. And that was the most important moment. That was the key moment for me to be able to become great, because I realized that I had to empty my cup and I had to listen and learn something and learn things that were maybe strange to me, and that I had to increase my expectation, my time frame. I had to come to grips with the fact that this is not, I'm trying to become a NASCAR race car driver or a Major League Baseball player or an NBA star, and it's not going to happen in a couple months or even a year. So I immediately said to myself, all right, I'm making a commitment to this thing. This is a lifelong commitment. I mean, this might take 10 years, but whatever it takes, I'm not going to quit. I'm committed to becoming great at this. And I realized that it's going to take a while. Maybe it's going to take me a couple of years. Maybe it's going to take me a decade, but there's no time clock. I shut the clock off and I said, I'm not going to put that kind of pressure on myself. So, most people, they leave all charged up, just like, I've been to 9 Anthony Robbins seminars, and you leave there charged up. I mean, you're ready to do everything it takes to be successful. And, as the days and weeks go on, that enthusiasm wanes. And now you're back to your normal day life. And before you know it, you're right back to doing all the crap that keeps you from being successful. And all the commitment that you made that day seems to be in the distance. And, so commitment is doing the thing that you said you were going to do long after that exciting feeling that you have is gone.
Gold nugget.
That's commitment. Commitment. Can you be committed? Can you lose money for 6 years and still be committed to this? That's what I had to do. I was negative. 6 years later, I hadn't made a penny, and my resolve was stronger than ever. For those of you who haven't read my mindset book, you can read why and how I use what I call the proximity effect and spent resources. I just kept telling myself, man, I got to be right around the corner. I mean, I put all this time into this. I don't care what my results are. I've got more knowledge, and I definitely am, even though it's not showing up in my results, I got to be on the right track. I put so much time into this, and I've learned so much. So I use spent resources as a motivator, as opposed to some people say, I've wasted the last 5 years of my life. Why did I ever do this? Oh my God, this is the worst decision I ever made. See, completely different way of looking at it. This is where mindset comes in, and why a champion is a champion. I can assure you that every champion, baseball, basketball, football, Olympic athlete, I don't care who it is, there's a horror story behind it. There's all kinds of setbacks and failures and things that they had to endure. I mean, Michael Jordan got cut from his high school basketball team. Again, I went years and years and years without making any money. David had this, doubled his money and then gave it all back and was at a loss. And there's, for many people, stories are far worse than that. Some people just I blew up several times early on. I blew up with options. I blew up on broker's advice. But luckily, when I blew up, it was a very small amount of money. At the time, it was all the money in the world to me. I thought it was the end of the world. But it was still an amount of money that was recoverable, that I could get a job, work, rebuild. If I lost all my money today, that wouldn't be recoverable. It's a lifetime of earnings. That's why every day I say, Mark Mינארווני, you could do serious damage to yourself. And you have tens of millions of dollars worth of buying power. You could put yourself in a pretty bad situation pretty fast. So, all right. So,
Arusha, if you can project your screen, Mark, you got to stop sharing, or maybe once Arusha,
I think once he shares, he'll not.
Once you press share screen on your toolbar there.
Okay, so I'll end yours, Mark.
Sure bump Mark off.
Zoom.
Not our Zoom though. This is
our Zoom. Yeah, well, maybe you're right.
Okay, let me share this.
Hey,
okay.
Mark, are you set up for sharing your screen?
Well, I can share it. Like I said, there's nothing interesting on the screen I'm zooming from, and the other system I have doesn't have a camera, so I'm not confident.
His computer.
I mean, look, there's nothing different. My thing looks the same as yours too. It's
we could just show everybody, just so they see there's nothing really different. I see it. Wow, what a nice VCP right here in the cues. Look at that. Wow. Here's a perfect VCP right there coming out.
Right here.
And you'll find also, I want you to look at the cues. Take a look at here. Look, VCP breakout, low cheat. Look at here, cheat. I mean, you're seeing the same thing in the cues. You're see all the action happens while you're in the uptrend and hitting new highs. In the base, that's where you're waiting. And then as it breaks out, so, it's universal, although there's going to be a lot more noise in the indexes and they're going to be more random, but applied to stocks, that's where it works most effectively. But go ahead, Arusha. So why don't you do a little MarketSmith tutorial or seminar or whatever you want to do here to enlighten us on some of the things that we can do with MarketSmith.
Okay. Well, first, what I'll do is I'll just show where some of those, an easy way to get to some of those screens that you're talking about are really the reports. So right up here in the top right hand side, there's a stock ideas button. And so now let me move the annoying floating Zoom windows everywhere.
I hate that.
So when you go here, usually I just keep it in the uptrend. But in the weekly review at the bottom right here is the Mינארווני trend. So this is the easiest way to get to it. So when you click on it, the bottom panel is going to open up. It's going to automatically open up right to the Mינארווני 5-month trend template. And then you'll see the other trend templates right here. So like a lot of times what I'll do is I'll double click on the first stock in the list. On the right hand side here, there's in this bottom panel to the right of the play button, there are a few icons. The third icon's all black icon, which will maximize this bottom panel. But a lot of times I'll click on the first icon to minimize it so I can look at the chart. And now I'm just hitting the space bar just to go through it and take a look at stocks. Now, I saw some questions here about the RS. What was the difference between the RS rating and the RS line? The RS rating, this is versus, so we have Archer Daniels up here. The RS rating is comparing Archer Daniels versus all the stocks in the database. So it's outperforming 72% of the stocks on a price performance basis. Now, the RS line is actually different. This is comparing Archer Daniels against the S&P 500. So when the line's going up, it's outperforming the S&P 500. When it's coming down, it's underperforming. So they're slightly different. Can be a little confusing there sometimes, but most of the times I'll use RS rating as a way to screen for stocks. But I'm always looking at the RS line as the way to confirm, hey, is this stock truly a leader in the market? Now, usually, especially on the weekends, when I'm going through a bunch of stocks, like what David did this week, I like to start up on the weekly charts, and because the left hand side, there's just a lot more data right here. You can see the trend. You have the pattern recognition highlighting, and a lot of times they're going to link up, with the VCP action. And so you can quickly see, okay, is this technically acting as a good trade, and also fundamentally, is it acting well too? Now, let me go back to the open stock ideas button here and just, what were some of the, was there another list that we wanted to highlight? Can't remember. I mean, there are a few others. Here's the Growth 250, of course. So the 5-month trend template is one list that I'll go through. And then the Growth 250 is the other one, where you click on this. So same area, go to in the uptrend tab, the weekly, there's the Growth 250. And so this is 300 stocks. And if I don't have as much time, then I'll just go through the Growth 250 and then do the same thing. Double click on the list, hit the space bar, go through the charts this way, see if anything is setting up. Now, if you don't have any time at all and you just want to, you only have like 10 minutes or whatever to look at some stocks, especially during the day, you can just click on the open stock ideas button, and then the first 3 lists right here, these are looking at the Growth 250, but they're also comparing using pattern recognition to filter them more. So there are 7 stocks breaking out today using pattern recognition, and I saw some questions on pattern recognition. How good is it and things like that. Look, it does 90%. I think like 85% of the kind of the identifying the patterns. It's a computer program, okay? So it's not going to get it perfect. For when you study these charts more and more, when you understand the VCP and really train your eyes to pick out the entry points, you're going to get better at it. Now, sometimes they'll agree with the charts, other times they'll disagree with it. So the way I look at it, it's a learning tool. So off of this computer program, it's going to tell you what stocks are breaking out. So there are 7 here, and we were talking about SolarEdge. And so it picked up this really big cup with handle right here. And so I guess I could kind of see that as a big cup with handle, but it's not the cleanest one. But on the daily, and so pattern recognition is going to analyze it differently. The daily, you're going to have, it's picking up a double bottom here too. But it's going off the weekly patterns for the breaking out today near pivot. and just identifying it there. Now, that's breaking out today, but as you know, a lot of times you want to be more prepared. Near pivot is going to be the one that's going to let you know stocks that might not have broken out just yet, and they haven't broken out according to pattern recognition. And so you can go and take a look at some of these right here. Like here's Eli Lilly. I'll go to the daily chart right here, forming a couple of handle. You can see some pretty good VCP pattern forming right here too. And so here's one that, you know, a lot of times you can start to find a little bit earlier and identify that. So that's kind of just the basic stuff with MarketSmith. Now I saw some other questions here. How do I change this bottom panel and get it to the pre-tax margin? In the top right hand side, there's a little wrench icon, and in the wrench icon, you'll get a little tool menu. There's a quarterly data block, so you can change it. If by default, it's going to be at dividends. You can change it to after-tax margin, pre-tax, gross margin. So that's an easy way. A lot of times I just have it either pre-tax or after-tax margin there. And so it's a real easy way to see if a stock has the code 33 with acceleration on the earnings, sales, and margins. So that's a pretty cool feature that we added. Now with the screens, I saw some questions about the code 33. Let me see if I have one right here. Okay, here's the code 33. So I created this screen. And so let me just show you some of the criteria that I used here. Okay, the EPS acceleration 3/4, sales acceleration 3/4, and after-tax margin, which is over 3/4. So I'll walk you through how to do that. So you can click on New Screen, New Stock Screen, and then just name it. So I'll just call it Code 33 Test, and hit Save. And so now when you hit Save, it's going to open up the criteria here, completely blank at this point. So now for the earnings acceleration, you can just go to the earnings category, and there's earnings acceleration last 3/4. Just hit yes. And so once you hit that, it's going to throw it up here in the right-hand side. Now with the sales, click on sales, and then there's a sales acceleration. Sales acceleration last 3/4, hit yes. And then the after-tax margin acceleration, last 3/4, hit yes. And so that's going to give you a number of stocks here that are hitting the code 33. So this is an easy way if you want to create a pretty tight screen. So we reduce them from 9,200 options all the way down to 84, and then the results are right at the bottom right here. So you can run this at any time. It's going to go and grab especially since it's a fundamental, it's just going to grab it here. If it's a more price action, it's 20-minute delayed, but that's an easy way to add some of those code 33s. Yep.
So, and if we want, we're screening from the MarketSmith database right now. If we want to, we can change that to a trend template.
Yes.
And also add additional criteria if you want technical criteria. So then we can narrow it down so we're not even looking at the code 33s unless they're in a stage 2 uptrend, right?
Yes. So the way to do that, after you create your screen right here, right at the top left, there's screen from MarketSmith database. So this is a link. When you click on this link, you're going to get a little tree structure here. And so here you have to go to reports and scroll down, and it's report stocks. Let me do that again. Okay, so it's reports. I'll close these other. So reports, the stocks folder, and then you scroll down, and then here are your Mינаর্ווনি trends templates right here. So if you want to do the 5-month, and you just select that and then hit select. And so now it's going to say, okay, we're running code 33 off the Mינаর্ווনি trend 5-month report instead of the MarketSmith database.
And that just cut cut it down in half,
Yep.
right? Or close to in half. We cut it way down. I think it was 80 something. Now we're down to
Exactly.
43.
Yep.
So now you're not, see, now what this does is it eliminates you from maybe, being tempted to buy something that's not in a stage 2 uptrend. If you set your screens up, you won't even see this stuff to go and start breaking rules. That's what you want to do. You want to set up a framework so that you're only looking at what you're supposed to be looking at. See, eliminating the moving parts, get as few moving parts, so then you're concentrating on what you really need to concentrate. Let the computer, let the screening do as much work as it can, get you as close as you can, and then hone in on the very best situations.
Yeah, we have a question here. What's the difference between the Mינארווני 5-month and the 5-month wide? Mark, do you want to answer that, or do you want me to?
Yeah, even though you probably know even better than me at this point, but so the wide, just we put where there's a relative strength cutoff on the Mינארווני 5-month trend. So I think we have it at 70, right, Marusha? I think it's at 70, maybe.
Yes.
Yeah. And on the wide, there is no relative strength, so you can set your own relative strength. So if you wanted to use it for stocks that have a 50 relative strength, see, with the main one, if you put a 50. It still wouldn't show those. It would show everything would be above 70 because it already has a 70 relative strength cutoff. The wide widens it a bit. And I think, does the wide also go below the 50-day?
Yes.
Yeah.
It
So
was both of those. Yep.
Right. So you'll see some of the low cheats that are not going to be set up below the 50-day moving average. So it allows the trading to be below, I think 10%, we have it set at 10% below the 50-day moving average.
We don't even have one, so it could be even
Okay, so it's just below.
Yeah, so what you could do is, we went off the Mינארווני 5-month. In this case, you probably want to go off the 5-month wide, and then you can throw in a moving average. And then put the percentage below and say, I only want it, they have to be at least within 10% below of the 50-day moving average.
And that's right in there. There's the 50-day moving average, and you can say the percentage, where is it there? Yeah, right here. Price the 50-day, and now you can say minus 10, right? Minus 10.
Yep. Well, actually, let me switch over to the 5-month wide.
Yeah, we're not on that, right? Yeah. Yeah, go to the wide. You were there, right there.
Here we go. Okay. So now we have 50 stocks. So it's not that many more, but there are 7 stocks. And so here, so in this case, you'd want to do it, the max is, well, actually, let's try minimum. Sometimes it gets a little confusing.
Yeah, I can't remember. I have to look at mine. Let me see. I'll look at, I have one. Hold on, because I'm trying to get out of here. I'll look at mine. Hold on a second, because you're sharing your screen now. I'm clicking on it like I thought I was sharing my screen. It gets confusing here. Let me take a look at mine. I have it set at 50-day. Where is my 50-day? Okay, so yeah, so it is set up as, it would be on the left box, a minus 10 number.
Okay. Yep. Okay. So I have that right. Yeah. So you're not going to see, and once again, there are only 50, and I just quickly went through like 8 of them, and they're all well above the 50. I mean, we've been in a pretty decent market, so a number of these stocks, especially the earnings and sales, are going to be above their 50s, even though it's still a small amount overall.
That's right.
Okay. What else did we want to go over? Were there any other things that you wanted? I'll show a couple other things that we added here. Actually, so yeah, I'll show this, and then we can go through more questions too. But what we did, and this was actually just released this weekend, but in the related information panel, we added a few more buttons. So we added a market button. So this is the IBD market. So you can see the uptrend there. You can get if you're an IBD subscriber, you can get nice. the IBD big picture. Yeah. So it makes it a little bit more convenient. Now this technical, and they're still working on it, but here, when you're looking at a stock, the percentage change, daily, weekly, monthly, quarterly, year to date, but then the RS ratings we put. So They're still working on a few of these criteria, but here's your kind of regular RS rating that you see on the chart here, 98. But what's really cool is down here, the 3-month RS rating, the 6-month RS rating. So those were data points you could put in the bottom panel, but now we just made it that much easier.
Is that moving average section say how much above or below the moving average it is?
Yeah.
I like that.
Yeah. So instead of having to left click and do it here, you can just put it right there. So now if you run, there's the code 33 right here, you can hit the space bar. You can have the panel open up here, and then hit the and see, hey, is it above those moving averages or not? Right. So it's an easy way. Or is it pulling back up? Well, for instance, like NVIDIA, right? We were talking about this before. It's 75% above the 200-day. So that's an easy way. And then pattern recognition. So we threw some of the pattern recognition data points here, current pattern and the previous pattern. And so you don't always have to hover your mouse.
This was just added literally yesterday?
This weekend. Yeah. So you guys are probably some of the first ones seeing this. We just added it this weekend.
Yeah, here it is. It's on mine. I see it. Yep. I didn't even see that before. I like it.
It's and then the lower right hand side there's an edit button, so you can actually get rid of some. So I actually got rid of the options one. Like if I hit the options, so you can eliminate so here's the option button. If you click on the minus, it'll remove it. And then you can move
the order. You can actually move the order.
Yeah. So I moved the market and technical and pattern recognition just to highlight it. So you can do that and put it at whatever order that you want now. So some cool little features here, and hopefully they'll add more. We came up with a number of other ideas to put in there. So if they get time, they'll add more to that.
Arusha, do you have to update
close it, sign out, and sign back in again? Since it was a release, that's always the best thing to do. So it went over the weekend. So then it should just show up.
Okay.
I like to see. I learned something new every year. Who would have known they were going to make a new update the night before?
That was perfect timing, right? Well, I was worried that I was like, oh gosh, just don't bring Market Smith down.
Exactly. What else as far as features? I mean, again, what I love about Market Smith is that it has all the relevant data, and everything that you need, everything that I talked about during this last 7 days is all here. It's all in one place. I know there's a lot of free data out there, but again, I have not found anything that comes even close to this, where you're going to get all the information in one place, laid out in such a manner. It really is. It's a category killer, in my opinion. This is the Krispy Kreme donut of the screening software, if you will. So it's the category killer all the way. So is there anything that you want to share as far as Market Smith? Any other functions that you would normally?
Trying to remember. I mean, because you went over the customized column layout stuff, so that was good. We went over all the key lists, right?
Yeah, one of the things that I like, Arusha, is that you can actually import.
That we did. That was the other thing we wanted to go over.
You could take an Excel spreadsheet or whatever, and you can import symbols, and then simply bring up a new screen. You create a new screen. Sure, you can do that. So take those.
So I just created just here in Excel. So like for instance, for the MPA members, right? I guess you can export. I didn't even realize that, but because you can export some of the buy list or whatever. Yes,
you can. You can for an MPA member, and you have our buy alert list, or whatever. You can export that information. You could export your trading stat.
Nice.
Yeah, you can export pretty much everything now, and then show them how you can create a new list and then bring that into a new list just simply by Control V.
Yeah. So as long as you can export it to like Excel or whatever, so you get to find the symbol column, highlight the symbols, and copy it, right? So now it's copied. Now when you go over to Market Smith, for that. And so you create a list here. So you just go new and then list and then create a list. I'll maximize it right here. So the key is sometimes the cursor will automatically go right into the symbol box. So what I do is I first left click to get the focus off that symbol box, then just do Control V for paste.
Yeah, what I do is I click in the left, just the left section, left to the symbol box. I just click there.
Okay.
That's all you have to do. Yeah, and it sets it up where you just Control V it.
Yep. And so then it should just throw it in there.
Yeah, now the list, now you can sort it now by relative strength, by all the various factors. You can even sort it by EPS due date. So now if you want to see what's the earnings coming up the most, most recently, if you want your own holdings, whatever, you can get an estimated EPS date. So this is super powerful, where you can take everything in and then sort it based on the various headings there, percentage of what from the high and so forth. This is what I do. As a matter of fact, we have for those of you who aren't MPA members, there's what's called a symbol drop box where users can actually put symbols in there and they're sent directly to me. And it actually pops up on my screen and shows me, matter of fact, do we even have, I'll show you that later. Actually, I'm not going to pitch MPA, but anyway, I get the symbols from the members, and I take them and I export them and I cut and paste them into MarketSmith, and then I take a look at them. And sometimes I'm getting ideas from members, that I didn't see. Sometimes there's a few things in there that I didn't see, and that's the whole idea is to share our research.
Now let me show you a few other lists here that we put in the technical folder. So report stocks technical. Now, so Mark, you were going over like IPOs, IPO dates, stuff like that. Well, what we did was we created a list called basis forming. And so we said, okay, just use pattern recognition, go through the whole database and find stocks that are at least either forming one of the coupled handles or double bottoms. If it's a consolidation, it has to be at least within 15% of the pivot, and we just throw it right here. So it's almost like we've always heard the question, and it's natural. Hey, can you screen for patterns? Can you screen for patterns? And so this is the closest thing that we have now. This essentially is a screen for patterns. So there are 8. I mean, it's tons. It's just running. So you have all this data right here.
If you run, I just ran that, and if you sort it in relative strength order, guess what stock is the first stock that comes up?
Oh, let me do that now. Okay, sorting by RS. Build-A-Bear. There you go.
Build-A-Bear.
Yeah. So here, what you can do is you can take that same IPO date, right? So here's your IPO date. I'll move it over a little bit. And then you sort by IPO date. But now it has some kind of pattern on too.
Interesting.
So it's screening for the IPO basis too, right? So now so at least it's been trading for a few weeks and picking up those IPO bases. So like for instance, here's the NerdWallet, right? Maybe this is a low cheat coming in, setting up here or something. But so this is another way to do it. Or if you want to find here, show me all the coupled handles or the flat bases, stuff like that. But a lot of times I do it just like Mark was showing earlier I'll sort by IPO dates because I want to see the most recent stocks coming into it. And you can either go through all the IPO bases or you can go and look at some other kind of bases too and say, you look for the primary basis, right? That here's like Sterling Check, which I was actually checking out. It's like because it's forming that primary base, right? So so this is another way to try to find some of those kind of primary bases because you don't always run into those. So this is an easy way to kind of use pattern recognition to identify some of them early on.
That's awesome. That's
so that's one. Oh, and then here's another one. Mark, I know you like the tight areas within the Girl 250. So what we did is we just did tight areas for the whole database. Okay. So you can go through, and this is another way to go and see some
All
stocks
tight
that might
areas?
all tight areas, all
Yeah.
tight areas.
We should also point out, Arusha, not to interrupt here, but before I forget, RS line blue dot.
Yep.
Really, this is a really, really important screen that I actually run when we're in, particularly in a bear market. This is a great utility screen. When you're in a bear market, this is going to show the stocks that have RS lines moving into new high ground. What other criteria is with this? It's not just RS line, right?
Not just RS line. And we actually did, so for just RS line new high, which you could always create a screen on, but
Right.
one problem with the RS line new high, I wouldn't always remember to run it every day, or it updates throughout the day. So we created an all RS line new high that collects everything for a couple of months, I think. So it just built another, so a lot of these are just kind of larger universe watch lists. So that's just 52-week high RS line, throw it into a list. And so when you have time, you could go through it. RS line blue dot, though, what's cool about this is we're taking the RS line, hitting a new high, 52-week high, but it has to be building a base too. So either it's building the base or it's breaking out of the base on that day or week. So here's regional management hitting an RS line new high and emerging out of a consolidation pattern. So you see the little blue dot light up. And the way this came about was this 10 plus years ago now. I was just started at Mark Smith, maybe there for a year or so, and I was looking at some markups by Bill O'Neill doing, and during a correction, he was marking up stock, building a base, marketing correction, RS line hitting new high over and over again. And it's like, gosh, there's just so many things to remember, and I know a lot of you guys are probably out there thinking that, right? There's so many moving parts. It definitely does slow down. But what Mike Webster, who was a longtime portfolio manager for Bill, he was sitting next to me working on pattern recognition. I was like, hey, Mike, is there any way we can program this into Mark Smith? He's like, oh, that's a really good idea. And that's how, and they came up with this blue dot. And so that's just an easy way to use the confirmation. In the open stock ideas button, there is an RS line blue dot list. So this is the easiest way to get to, and you can go and see. And we added that maybe a year ago or so. And so that's another great way to find ideas that are both starting to outperform the market and might be setting up.
Yeah. Yep. It's a great screen to run in a correction, and you'll find the stocks that are holding up, coming out of bases, and the relative strength lines. Now, again, I screen, I keep a wide screen, and I just look at everything by hand. Like, I'm going to pick a lot of this up. David's going to pick a lot of this up just with our eye. We're going to look at a chart. And a lot of this we're going to see literally in a nanosecond. We're going to see everything in a bird's eye view and know if we're interested or not. But when you're first starting off, these are great. I look at these as two things. One, training wheels if you're starting, and two, time savers if you've been doing this for a while, and utilitarian screens to use under certain conditions. If you want to, sometimes these screens will pop something up that you just missed. You scanned over, and because sometimes you get fatigued when you're screening them by hand and you're going through. You start getting fatigued after you looked at a couple hundred names, and you might glare over a name. But with this, it might only come up with 15, 20 names, and it'll highlight a few names in there that you passed over. So by having all this, you really, nothing's going to get through the net. I mean, when you start running these screens and using this tool properly, you're going to see everything. It's just a matter of whether you place your buy order or not, but you're going to see it all. It's going to come up in front of you.
Right. Yeah. There's so many different ways.
Yeah.
But in the end, I would say in the beginning, just keep it simple. The most important thing is, especially for those that are newer, just be consistent, right? Be consistent. You don't have to do, 10 hours a day at it. You'll burn yourself out. You want to be consistent. This is a marathon, not a sprint.
Yeah, you only need, an hour or two a day is probably the max that you need. During the week, I only do about 30 minutes of screening to an hour tops. On the weekend, I do hours. I do 2 days of several hours each day. But yeah, it's a lot of repetitiveness, and like Arusha said, don't go crazy and burn yourself out. But in the beginning, though, you're so gung ho.
Exactly.
It's so much fun. You're up all night screening. You know, I used to screen till the sun came up. I literally would flip those pages and go through those books all night until I couldn't even wait for trading on Monday morning. So that's great. That's the passion. That's what you need.
I think that's it. I mean, was there anything else you wanted me to go over, Mark?
Well, no, I mean, again, this program is so powerful that we could literally be going over MarketSmith features for hours and hours and hours.
Right.
It could go on for a long time, but you'll find what's useful for you. But the main thing, I think, what we went over so far is really, the relative strength line, relative strength number, your earnings, all your earnings and margins and sales data, your earnings block up here up in the left-hand corner where you have your annuals, your growth rate, all those things that I talked about, all those elements that I talked about in fundamentals, they're all here. All the technicals you need, they're all here. Everything is here in one glance. So yeah, that's and then you've got the power of actually screening and narrowing down your list to a manageable list of candidates and bringing it from 10,000 names down to those top couple hundred, 300-400 names that you're going to look through, and then find those very few that are going to make it into your portfolio on any one day.
Yeah, and I saw some questions here about the are there some tutorials for Marksmith? Yeah, we have over 100 webinars on the main page of marksmith.com. And then there are webinars that Mark and David have done for us too. So those are all there, but there are tutorials, and there's also you can set up a coaching session, especially when you're new. They'll give you a nice little overview of this, kind of like what I did here, but more in depth.
Arusha, a quick question. If there's a way to add a column for stage, like stage 2, is there?
Good. Yeah, good question. So those are a little bit more exclusive. So it's not going to be in the column, customized column layout, but in the basis forming, we have it. I think we have it. Yeah. So these are IPO bases, so that's not going to have it right here. But let's sort by weekly base. So that there's a stage count right here. So actually Shopify is on a 9th stage base, by the way. Let me scroll down. So these are all, yep. So you're all first stage bases, flat bases.
Now that weekly base stage, Arusha, is that only available here, or can we use that in our own list?
Only available here.
Yeah, that's what I thought, because I'd love to have that to be used anywhere. That would be nice.
Right. Yeah. For years, because as you know, we had Marks with an IBD, which is the retail, but there's an institutional platform too, which is a lot more expensive. And so they got the bells and whistles, and so we couldn't add like a lot of like the pattern recognition kind of stuff in the customized column layout, because then it essentially would give screening for patterns. But we were able to get this done exclusive for, but so they're just for these kind of pattern recognition related lists.
And something else.
Arusha, is there any way to cut down? I mean, that's 1,842 names.
I see that.
You might as well go through the whole database. I mean, you might as well go through the Daily Graphs book. Is there any way of cutting it down? I mean, even when I was sorting by relative strength, there were a lot of patterns that didn't look very good. I mean,
yeah,
it would say something like cup and handle, and there was no cup and handle, or it would say, bases forming, but I mean, if you just go by relative strength rank, yes, that Build-A-Bear comes up right at the top. That looks great, but then you start going through it and I go, no, that doesn't look good. That doesn't look good. Isn't there a way of getting it down to, 100 completed patterns or something?
Dave, shh. No, you're going to kill the golden goose. Yes, thank God. If we could quantify everything, that would be a problem. I don't think we ever will. But again, that's the limitations. This is the limitations of computers. They can't do all the work. They can only stick us in a direction, right?
Okay.
Well,
yeah, I mean, you could use kind of the column layout right here, and there's a little lock where you can lock it. So say you can isolate it. First have it sort by the patterns, and then sort by either the weekly base stage or something like that, and then just go through the ones that are earlier base stages or that are maybe even earlier IPOs, stuff like that. So that would be the only thing. But yeah, it's here. It's just doing it is just a pure screen, pure database, kind of building a universe more than anything else. So there,
Right.
But so a lot of times I just screen it by the recent, like when you can use event date here or something. What are the most recent ones? And
Okay,
let me take a look.
Two things. One, there's a question that I want to address, but the lock function is really, I just want to address that real quick. It's really important because you can screen, have your first criteria, lock it, and then you can then add another criteria and it'll actually put it in order of that criteria. So that's another great function to have those locks.
Yeah, so I just did it right now. So I locked it by the weekly base type. So it's first going with saucer with handle, and I sorted then the weekly base stage count and said, show me all the earliest ones. The arrow's pointing up. It says sending order. So here's the ones, then the 1Bs, 1Cs, 2s. But like, let me go down to more common, like a flat base, right? So here's they're also right flat bases, and here are all kind of the stage 1 flat bases.
Yeah.
And then
question that we just had, and it's a common question. Question was for me, do I think quantum computing is going to be a threat to trading? And the answer is no, I don't believe that. I don't think artificial intelligence or computers is ultimately going to be a threat. Look, every door leads to another door. You know, everything opens up another opportunity. And if we were to quantify everything and everything became efficient, I assure you there'd be an inefficiency somewhere else. This is yes, you know, when you get markets that are widely covered and you're able to quantify things so well, yeah, you're going to make it more efficient. But again, it all leads to other opportunities. We were asking this question 100 years ago about other things, and you know, high frequency trading, when the SOS bandits, program trading, it's always something. There's always something that people worry about or try to blame, and but there's always going to be inefficiencies as long as we have an auction marketplace and human beings are involved. Because ultimately, we're dealing with emotions here. We're dealing with perception. You got to realize there really is no value, real value. You know, this is a stock is like a painting. I mean, you can get into all this intrinsic value and breakup value and stuff, but 99% of every stock is trading at a gigantic premium to, if you broke apart Microsoft or any of these companies and you sold them off by their pieces like a corporate raider, it'd probably be, you know, if it's $100 a share, you'd probably get $5 a share. You know, it's again, these are like paintings. It's perception. You're paying out, you know, for a lot of years of earnings. And when the perception changes, that's where you get the price moves up and down. I think Larry Haight said it's turning more and more into a voting machine, which would actually argue against computers figuring everything out. Like if it's turning more into a voting machine, it should actually turn more into a weighing machine. Like if computers could figure everything out, well, then everything should be more correctly valued. And in fact, it's going the opposite direction, which is great. That's what you want. You don't want everything to be perfectly valued. You want inefficiencies. That creates the opportunity.
One quick thing, I'm also just wanting to interject, Mark. I see with a lot of the questions that people are asking, if Marcus Smith can do this and that, and Arush is, you know, sharing with you that there are a lot of planned updates and upgrades at some point, but Mark Mינארווני didn't have all those things. He's been doing this for over 30 years with exactly what you have. In fact, way less than what you have
Neither
today.
did David Ryan.
So keep that in mind, guys. Everything
That's a wonderful point, Bob. What a great point. Jesse Livermore was trading with curb brokers at bucket shops. Okay. And he made $100 million in the market and made $1 million in one day in the 1920s. Okay. Again, do the math and adjust that for current dollars. So, you know, again, this is just taking you to, you know, it's just a tool, just another tool. These are all tools. But it comes down to this is a game of, this is like poker. You could play poker, you know, all the percentages perfectly, you know exactly what hand to play. That's not, you can't play a poker purely mathematically and go win a World Series tournament or beat the best players. Not going to happen. It's not going to happen because it's not perfectly efficient. You've got to play the player. You've got to use there's other elements there. So even though you know all the probabilities, that's going to help you. That's going to help you. That math is going to get you in the right direction and let you understand the probabilities and where you should be making good bet. You should be making certain types of bets, and some of it is based on math. But ultimately, again, this is a business that requires skill. You know, just like, I mean, a professional athlete, you know, it's a game of skill, but it's a business. It's a business. A professional athlete is in business, but it is still a game of skill.
Marisha, one last thing also.
Even trial law, I'm sorry, but even trial law, you know, you're a lawyer. There's the letter of the law. But why isn't everybody a great trial attorney? Because it comes down to skill, using that. And then using it in the courtroom, and there's skill involved. Many of these businesses are come down to skill at the highest level. No different in the stock market. But go ahead.
Not call me eating. Risha, I know there was questions. I'm not sure if you answered it. What were you able to just quickly demonstrate how to upload?
Yes. Yeah.
A list,
the
Excel.
Yeah, we did that, and there was some questions on adding the moving averages. Top right hand side, click on the wrench icon, and then there's a moving averages option right here, and then you can add 2 more moving averages.
And there's a lot, you know, there's tutorials and everything. If you're a MarketSmith customer, there's all tutorials on this. I'm not sure you guys want to waste, you know, this time on
exactly,
put a moving average on MarketSmith, you know.
Right.
But the one thing that was important is
you got us all here now, so take advantage of it.
For the private access members who are trying to upload the buy alert list or watch list, we did add the feature of being able to export our buy alert list from the buy alert page. There's a button, export, that will put it right into the spreadsheet for you. 1 ticker per cell. Makes it super easy. Just upload it, as Arisha demonstrated. And I know that was a feature that was long asked, and we included that in our most recent upgrade to our platform this past summer. So that is that easy for you to do that.
Okay, so I guess that's it, right? I guess we can go back to.
I'll stop my share.
Yeah, we can share my screen. I know we've had questions.
Wow, look at that! It's like a CNBC thing.
There's been some questions prior about buying pullbacks to the breakouts and so forth. I have an example here that I want to go over. So let me just get a second here. I'm going to share my screen again.
Yeah, okay, you saw that question.
Let's see here. Hold on a second. I got to get situated. Where is my... Okay, there we go. Let me share my screen again. Okay, you guys seeing it again?
Yes.
All right, let me hide my controls. Okay, there we go. So here's a stock, this GBL that broke out, and this is relatively thin, right? Let's see, at least it looks it when I first look at it here. Yeah, okay. This trades 18,000 shares a day, so you know this probably be all over the place. But here's a stock that broke out on Friday, right? We get this question all the time, where you know if you miss the breakout, can you then buy it if it pulls back to the breakout? So essentially, you know, you're at the same situation, right? So here, breakout is above 2820, right? So right here, I'll draw a little line in there, right? So now you've pulled back just below that. So basically you're actually getting a little bit better price than if you first bought it breaking out, right, on Friday. So, okay, I will sometimes do this. Now, in this particular instance here, you see that this has come back here quite a bit, right? And if this comes all the way back down, takes out the low, you've got an engulfing day. If it comes all the way down and takes out this low, now you're below the 50-day, the 20-day, and you've engulfed the entire pivot. And that would be really, really negative, okay? And there you just bounced it up because some of you probably just bought it, knowing where I'm going with this. Well, that's just bid and ask spread anyway, right? Yeah, it's 793 to 27.93 to 28.82. So you've got a pretty good spread here. It's a little bit spready, but now I'm going to measure. It pulls back here. What I want to figure out is it acting abnormal? First of all, I'm not going to buy the stock. I might buy the stock on a pullback to the breakout, but only if it's acting normal. If the stock's acting normal, fine. I can buy that pullback and then watch it from there and see if it continues to act normal. If this was, let's just say this was pulling back and today it was down 20%, then I'm definitely not going to buy it. It's just, that's a huge, gigantic reversal. So depending on how it's acting, but also I'm going to measure my distance to the danger point. All right. So from here now, all right. So down here, yeah, we're at about 5%. If it engulfs the previous day's low, we're looking at maybe 2 or 3%. Okay. So maybe I buy some here pulling back and I set my first stop. I stagger a stop below Friday's low and sell half of the position, sell the other half below this low, the pivot low, and now I scale myself out and I go from, instead of a 5 or 6% loss, I'm going to be at maybe a 4. I bring the loss down a bit, I stagger it, and that's sort of how I would play this. Is this my preferred way? No. My preferred way would be to buy it on the breakout, because the best trades usually are going to follow through and take off. Some of them come in and so forth, but if I'm always buying the stocks that pull back, I'm actually buying the weakest ones. The strongest ones are probably going to get away and take off and not pull back. So I really want to be in that position and give myself that opportunity. But if you did miss it, you could buy on a pullback here. We could try this here, and if it doesn't have a good close, you just get out of it. This is the benefit of being a relatively smaller trader, and even with my trading and Mark Ritchie, we're very small. I mean, we're, to the average guy, we're probably big. I mean, I buy sometimes $10 million of a stock from my own personal account. But that's still microscopic. That's a very small, compared to an institutional mutual fund, a hedge fund that has to go in here and buy into these names. So I can go in and I wouldn't go in with a big position in this because it only trades 18,000 shares a day, but I would position size accordingly. With something like this, I probably wouldn't risk more than a couple thousand shares on this. But again, if you're small, you could go in here and try this here and take this little tiny risk. And if it doesn't have a good close, you just get out of it. And you lost a few bucks, but you position yourself again for asymmetric leverage because your upside is unlimited and your downside is capped. So constantly, just thinking in that way. Let's see. Any more questions? I'm sure we have tons of questions. What do we have, Bob? 2,000 questions?
Double what we had from before. Real quick, Mark, a very common question being asked, which you get asked all the time, but it is about progressive exposure. When are you doing it? Are you doing it just based on profits on paper, only on realized profits, for one? And the second part is, how do you do it? Meaning, do you just increase the size per position, or do you take more trades, more stocks, if you will?
All of the above. All of the above. It's a combination of all of that. Right from intraday to daily. So today's a perfect example. I come into a few names, right? I come into SBOW. Starts working out here, right? Okay. So I add another name, SDXS, right? This is still holding up, relatively okay. But now SBO came back, stopped me out. This one hasn't made any gains. It's actually down a bit. I'm down a little bit. Again, I'm not gonna press too much here. Maybe if I buy another name here, maybe I try this this GBL. I'm gonna come in small, because I don't have any traction. So that's there's no closed profits there, right? That's just open trades. Well, let's just say prior to this, I had, 5 or 6 trades that have worked out really nice last week and I've got profits. yes, that might influence me to be a little more aggressive. All right. If I'm coming from straight cash, well, the only thing I can really assess on is what's happening with the open profits, because I haven't taken any yet, right? Or if I even haven't taken any trades, the only thing I can assess the health of the market on is the buy list and the stocks that I haven't even bought yet and how they're acting. So it's very incremental, and it's all of the above. If I can get some profits nailed down, then that's money in the bank. That's money that is absolutely in the bank. If it's open, well, if I've got 4 or 5 stocks and the open profits are 2 or 3%, that's not really much of a cushion, because that could be erased in an hour. That all those stocks could reverse and all be negative in a matter of no time at all. But let's just say I've got 5 open positions. One of them's up 25%, the other one's up 20, one's up 15, one's down 2, the other one's up 3. I'm in a much better position there. My open positions I got a few that are so big that I've got more cushion. So now I'm going to be a little more aggressive there. If you ask Mark Ritchie, he's going to say, yeah, same thing. Right, Mark? Yeah. You're going to say, yep, same thing what Mark just said. I mean, we're going to
kind of, yeah. Well,
yeah.
Try and sometimes communicate it maybe with a different analogy, but in terms of progressive exposure, there's no other way to do it. So that's absolutely
right.
The same thing.
I'm just saying that, it's not like you're going to be able to come up with any different than me and say, oh yes, if it does this, you do that. We've got to gauge it as we go along here between open profits, buy alert list, closed profits, and between those 3 elements, that's, then we're making that decision, subjectively. We're making that decision based on our own feel of the market and our own tolerance. It really comes down to your own tolerance too. Some people are very aggressive, and they're able to tolerate more risk and more fluctuation. Mark and I are very close, and we're very similar in the type of trading we do as far as our tolerance for risk, our tolerance for misbehavior. We're very close. But there's other traders that do tremendous, and they might be far away from what we do. They're holding through big pullbacks and going through lots of volatility. And they're successful, but they get there in a different way, and they have maybe a stomach for more price fluctuation. But Mark and I both are really risk adverse. David too is very risk adverse. We're quick to cut and run.
I would add on the progressive exposure. I think it is really it's a blend of art and science. I mean, a lot of this is of course a blend of art and science. But the one question I feel like, Mark, we get a lot is scientific approach to progressive exposure. If I'm up exactly 4%, can then I add 1%, or however people are thinking about it? And we usually always say, well, it's a little more intuitive, when we're getting aggressive, meaning if I bought a stock and it's really acting well, and then I see 2 more and they start to move, you get a little bit almost, I hate to use the sixth sense feel, but where pattern of your own pattern recognition, where I've seen this before, and just kind of knowing through repetition of what you should do. And I've also made the point, something I'm still trying to get better at. I feel like the reason I have more confidence now is because I've put in how many reps over the last decade. To Mark's point, trying to quiet David down from we don't want to distill it to just the perfect absolute screen.
No.
David and Mark have spent 70 years combined, or 80 years of combined experience between you guys, or something like that. You guys are going to be in the Centennial Club pretty soon. Of how many years spent screening stocks and perfecting their eye. That's where so much of that intuitive skill comes from.
Yeah, I spent a lot of time when I was young. I boxed and I fought tournament karate and PKA karate when I was very young, at a fairly high competitive level. And it's like asking, when do you go for it and go for a knockout? When you're boxing, you're jabbing and you're feeling the opponent out. The main thing is don't put yourself in a position to get yourself knocked out, right? So you stick and you move and you jab. Especially like in karate, there'd be times where, you're in a tournament and all of a sudden, you get a kick in and you hit the guy just right and he buckles over, and you just know there's that moment of opportunity and weakness where you're just going to charge in now and attack and unload. That's the same thing with stock trading. There's an experience there, and you're going to see and feel when the time is right, where you're going to get aggressive and you're going to back off. Now, there's different types of, in fighting and karate and even in boxing, you've got the boxer that's the brawler. He just goes in there and just slugs and takes a shot and gives a shot and takes a shot and gives a shot. That's the brawler. I wasn't the brawler. I was a boxer. I would stay on the outside and jab and stick and move and try to outmaneuver my opponent, and only get aggressive when I saw that opportunity, that low risk opportunity. Probably this is, one of the things that filtered right into my trading, that risk first approach. But you get it's just like with trading and fighting. Some guys just risk it all. They just run in there and go for it and take the risk of getting their block knocked off. And sometimes that leads to getting knocked out. And then you got someone like Floyd Mayweather, who's, 50 fights, never lost, never been knocked out. This is a true strategist that is, Floyd Mayweather is the ultimate risk manager in professional fighting. I don't think there's anybody better. This guy is unbelievable on how he just never seems to get himself into any great trouble and never gets himself knocked out after, so many fights. So I try to, that's how I trade. That's my trading style. But your trading style might be, more of a brawler, and you're able to handle that. And that's what works best for you. Either way, it has to be all within the confines of diligent and prudent and acceptable risk versus your reward. The math has to make sense. How you get there, maybe more aggressive at times, less aggressive, more diversified, less diversified. That's stylistic and how you're going to skin the cat.
I do know, Mark, with a lot of people, this is where your individual risk tolerance comes into play as well. Meaning, when Mark showed you in the workbook during risk management, he took a trade at that 6.25%. If he made a profit on it, he's willing to parlay double up to 12.5 right away. He's putting at risk that entire profit he made on the first trade, knowing if he's right again, now he's going to get up to 25% in full size very quickly and be on the early part of what could be a very easy dollar environment that we're entering. On the flip side, some of you guys don't want to give back all that profit you just made. You just don't want to do one step forward, one step back, and you're a little more risk averse. So you may only go up your position size in that example from 6.25 to maybe 9% and then to 12. So it's your risk tolerance, and you will gradually grow to being more comfortable the more committed you become and the more conviction you get with the methodology to understand why you want to put it all on the line if you're comfortable with that. Because when you do, hit that, get that pitch right over the plate and you can get some big hits out of it, that's how Mark gets so big so quickly.
I'll show you a perfect example. So at SBOW, if today this stock just blasted off, let's say it just ran right up and got super extended. It was up like one of these other stocks like TMST, 15%. I probably sell half of it, sell all of it, just, take the money and run. Let's say I made, because at one time it was about 2,000 here. So let's say I made, 4,000 or 5,000. Okay. And I closed that trade out. I now have $5,000 to go into the next trade and lever up. And if that doesn't work out and I lose that whole 5,000, I break even on the day. Remember I talked about in mind-blowing math, just breaking even and putting yourself in a position to have those 37 days out of the year. And the rest of the time, if you just break even, you're going to get there. See, that's how I would finance my risk today. There's sometimes where I'll take short-term trades. I'll actually go into the market and I'll look for some short-term trades, and I'll just try to sort of just nip away at a few short-term trades to build some profit, to risk on a trade that I want to be in, a name that I want to be in, but it might have more risk than I want to take initially. So what I'll try to do is just build up some profit, and then I'll take that profit and I'll go into that riskier trade that maybe has that wider stop, and I'll finance it. Like I go in with that mindset. Very often I'll do that. For maybe even a longer term play. I want to hold the stock. I want to try to make a bigger move on this stock, but I got to go through some volatility. So I try to make some short term profits and use that. So again, my worst case scenario is I break even. You know, if I'm financing, but if I start small and I build up those profits, see, initially my worst case scenario is not that bad. And now once I make some of those profits, I actually move into more opportunity. And my worst case scenario is actually better. It's break even now. Always looking at it from a worst case scenario, starting off with the most acceptable worst case scenario and then improving that worst case scenario. Constantly trying to get yourself into a bigger profitable position, but improving your worst case scenario. This is really, you know, strategic thinking. You know, it takes time to learn, and some of us are better at this than others. If there's any one thing that I have a natural talent for, is I am very good at thinking in relative terms. I can weigh a lot of things and like cross-reference them and relate them. This is something that I'm naturally good at ever since I was a kid. Non-linear thinking, if you will, more relative thinking. Some people are very black and white, and they're very linear thinkers. It's black, it's white, it's mechanical, and they need mechanical answers. There's other people that are more intuitive. Again, this is also what's going to lead you into how you do this, how you execute this, and what works best for you. And you're going to find your own genius. Every one of us, every one of you has genius inside. I will give you 100% assurity of that. Autistic people that have what a quote unquote handicap have genius. All right. Everybody has genius. It's just a matter of finding it and making it work for you, what works for you. But there is genius and there is potential in everybody. Let's see, what else? What do we got? We still got a good amount of the day left here. We're only at 1:39 in the day, so we still have a lot of time.
One of the things we forgot to do, which is one of the other nice benefits of being a Master Trader Program attendee, is MarketSmith does provide our group specifically a very special offer, which I'm just putting out there in the chat. The link, we'll follow up with an email as well. But the link that does provide you 15 months, I believe, Arusha, for the price of 12.
Yeah, so it's for new people, and for current people, you know, just call in to see they probably can add at least another month. But for new people, it's 15 months for the price of 12. It is the best offer that we give anywhere. We only save it for this event, and so it is.
And we had a fight for that, right, Arusha?
Yeah.
MarketSmith doesn't discount too easily. That's what I said.
No, they do not.
We never lower the price, and I was definitely I would fight to the death when people would try to suggest lower the price. If anything, I would always say it's going up.
Hey, when you got the goods, you got the goods. You know, when you got the goods,
exactly.
And that's it. You know, you get what you pay for. And again, you can get free stuff out there, but you're not getting what is in MarketSmith. I can assure you, not even close. Not even close.
I mean, I was a subscriber of Daily Graphs Online, which was the predecessor to MarketSmith, for 8-9 years. I never got one free day, but it's like, you know, this is so worth it. It's a huge time saver. You can find the ideas earlier, and you know, if you really want to commit to this, like you guys were saying earlier, I mean, you have to commit, and this is the best tool to find these ideas.
Well, and needless to say, you know, you look at someone like Mark Ritchie. He was a paid client of ours for 10 years. I just got to take 2 shout outs in the 2020 final U.S. Investing Championship results for the stock division. 5th place, Shahid Salim. He's back to the Master Trader Program here today. Nish Sikri, who was up 210%. Shahid was up 322%. Both of them are here at the Master Trader Program today. And both of them were here before. So
think about that humility. I mean, these are guys that are performing amazing. Some of these guys have performed amazing for years and years. We have incredible clients that have tremendous performance. They're here the 8th year in a row. 8 years to Master Trader Program. This is, a constant learning. We're never keeping that level of humility and always learning. I'm learning to this day. I learn every day. I'm a master at what I do, but a master just means that you can teach yourself. That's all it means to be a master, is that you now can learn on your own, which does not mean that you don't take other people's ideas and advice. It just means that you can decipher them and conform them to what you do. So good point, Bob. And congratulations also to everyone. We have right now in the top 25 in the U.S. Investing Championship, 12 of the top 25 are our clients, and many in the below the top 25 too. And we've had winners over the last couple of years who are our clients, and always in the top couple spots are always our clients. So
I think let's see some questions. If Marcus Smith might be down, yeah, my charts are not refreshing either.
Is that right?
Yeah.
Is it on a Mac for you?
I'm on PC.
You're on PC? Okay, let me let them know, because I was on a Mac, and I just started having problems.
I'm on a PC.
Okay.
Yeah. And I tell you,
Yeah,
Marcus Smith, it's pretty robust. Very rarely does Marcus Smith ever go down. That's important.
The offer, guys, just so you know, I believe Arusha would be good right through November or even December.
30 days.
Yeah.
So yeah, I went. Yeah, last time we were a little bit more relaxed, but now, yeah, we're giving enough time. Usually it's like, this is obviously the best deal out there.
Yeah.
Usually just give a few days to
right.
And you moving up here pretty nicely. It's still coming on here. So that's a nice follow through from Friday's up move here, but we're breaking out today, of course.
SF is asking, Mark, what is your role on your total portfolio risk? If you were fully invested or even more, what would your worst case scenario be, allowing for a drawdown in a single day?
Okay, so again, I'm going to progressively expose into that, but at any one time, what I will go up to whatever the stops are, whatever the average of the stop is. So let's just say I'm fully invested with 8 positions, right? And my average stop, I've got one stop at 8, one stop at 2, one stop at 6. The average of those stops is going to be my total risk, right? That's the total amount, whatever the average is of all those stops. So if I average a 5% stop and I have $1 million in the market, well then my maximum risk is going to be 5%, is going to be $50,000, right? So but what's the chances of that every stock stops me out at one time? Very slim. But could I get rolled out of them? Could I get stopped out of some, add some back, get stopped out of some, add some back, and keep getting stopped while my open positions don't really pay for it much? Yes, that can happen. And that's what you have to be careful, is that you don't just keep adding stock after stock after stock, that you're getting stopped and you add another one. This is where people that use stops get beat up, and then they say, this isn't working. No, you're not working it properly. You keep piling in there when it's not working. You should be getting smaller and smaller. So the answer to your question is, it's the average of all my stops. But am I ever getting to that at one time? Virtually never. I've been through crashes and flash crashes, and never did I have where I took my maximum drawdown in any one day. So a drawdown for me is going to happen from getting repeatedly stopped. Just to, I was thinking about this last night. I made a commitment a long time ago that if I was going to ever blow up, I was going to do it one small loss at a time. That's how I'm going down. If I'm going down, it's going to be, you're going to have to cut me 1,000 times. It's going to be one small loss at a time, and it's going to be on smaller and smaller and smaller losses. What I found is that since I made that commitment, I never went down big. I've never gone down big because I just never put myself in that position. As soon as I start getting stopped, I lower my position sizes. They get progressively smaller. So I really never get a big drawdown, because by the time it sinks its teeth into me, I'm in cash. And that is an indication that the market's bad anyway. If you just keep repeatedly getting stopped out, usually you go into a correction or the market's all over the place and you don't have buy setups. So you move yourself into cash and you're knocked out with maybe a mid single digit loss. And now, you've protected yourself. So that, now there's some people that they make the commitment, they go in and they're just going to hold stocks down. So basically they've made the commitment that they're going to go down, with a big loss. They're going to hold with, quote unquote diamond hands, and the stock's got to blow up for them to go to blow up. I find that commitment almost always leads to a blow up. My commitment always leads to protecting myself and not blowing up. And the people who commit to holding through thick and thin, at some point, that the worst case scenario happens. I'm always protecting myself from the worst case scenario. I'm always improving my worst case scenario. You have to know, with stock trading and anything in speculation, you have to know, where is your edge? What is my edge here? That's why we talked about, what do you control? You only control certain things. Everything else is completely out of your control. So you've got to make the most use of what you do control and use that to offset what you don't control. I don't control batting average. I don't control how many times I'm right. So how do I get a control over my trading if I have these things that I don't control? I don't rely upon them. I switch my reliance to the things that I do control, and that's what I rely upon for my edge. Again, this is getting kind of deep. Those of you that are seasoned traders, you immediately know exactly what I'm talking about and how it relates to trading. Some people who, are just starting are going, what the hell's this guy talking about? I hear what he's saying, but how does that relate to my trading? You'll understand after a while. Stay with it long enough, and these words you'll realize that these are golden words that are worth millions of dollars. Let's see, what else have we got going on here? How about more questions?
For a lot more than that. Like it collectively.
So RBLX is down 9% now. So again, this is where we got to gauge. See, this is why we don't just buy just because they're up. So we're off about 17% off the highs. This is fine. This is normal. This is normal. A 20% pullback from the highs of a potential power play is perfectly normal. What we're looking for is for this to go sideways now for a number of days and form a base, preferably a VCP. I'd love to see a little VCP, but a low cheat coming out, maybe 15, 20% off the highs, and I'm in. This is all I have to see. I don't need any fundamentals here. When we're in a power play, I don't need any fundamentals. I know something's going on here. At the very least, the voting machine is voting very strongly for RBLX. And the wave, the wave of buyers is in my direction. So at the very least, but something's going on here. All right. Again, this is not Aunt Betty buying here. And this is not a retail buying moving the stock up 100% like this. This is big buying. So now it's just a matter of if it's going to continue, and we got to try to get on board for continuation from a low risk entry point. Go ahead. Let's go to another question.
Yeah, real quick, Francis. Private access does not include Marcus Smith, so that is a separate fee, a separate service. Mark, I think might be worth just addressing Kem or Sem, not sure how to pronounce it, asking if you would be buying the dip of BA.
Buying the dip of BA. Oh my Lord. Did you just take the Master Trader program? Not sure. Did you sure you attended? The answer is no. Of course not. So I'm not even sure how you could ask this question if with everything we've gone over, I'm not trying to be sarcastic with you, but in all honesty, do you see the volatility contracting on the right side? Not to mention that, I would only be buying a pullback to a breakout to a pivot point. So if I'm ever going to buy a pullback, it's going to be within the pivot pulling back to the pivot, but you still have to remember I said during the curriculum that everything builds, and anything that we say previous or anything that we say currently doesn't negate anything that we said previous. So everything builds on each other. This is not building on that, on those teachings where we don't have the VCP. This pullback is not pulling back. We want to see the VCP, right? We want to see the VCP, the low cheat, the handle, the breakout. So the only way that the word pullback is going to be used, as far as how I do it, is it's got to be pulling back in the pivot, cheat, low cheat, handle, pull back to the breakout. That's it. Though, and to me, that's enough. I mean, that's 4 floors. That's 4 chances to get on a stock within the base and just slightly out of the base, pulling back to the base. That's 4 opportunities. If you can't get it right there, now that's 4 opportunities, potential opportunities in one base, and a stock might build 5 bases, maybe even more. But let's just say it even builds 2 or 3 bases within a stage 2 uptrend. So now you've got a potential between 1 and 4 shots at the stock 4 times or 3 times. So there's a lot of opportunities to get on the stock and make yourself a nice profit. This would not be one of them for me here. No, I wouldn't be buying this at all. I'm not even sure if this would meet stage 2 uptrend. Let's see what this looks like here. Oh, so we do have a problem with Market Smith.
Yeah.
Do we have to log off and log back on?
No. It looks like it's a server issue, and it's just kind of slowly spreading. It seems like so. They're looking into it.
Okay. All right. So we'll come back to that. But the VA, I would look at this, and by looking at the chart, I normally can just look at it and know whether it's got a good relative strength line or a good relative strength number. And I would speculate that this has a declining relative strength line that's probably hitting new lows or close to it, and the relative strength is not high enough for me to even be involved in this in the first place. And you can also see it tried to get into a stage 2 uptrend, and right here it really was game time. Right here, you see, and I was looking at Boeing right around here. I was looking at Boeing when it got into the stage 2 uptrend, started putting in those first few bases, and you started building this cheat area, and then you see it couldn't hold, abnormal. Tried to rally back, and now it's living below the 200-day, and it's looking stage 1 at the least, or stage 3. So this is not in your bona fide stage 2 uptrend anymore. This is really looking quite poor. I'd rather buy it at a higher price and get that base building that I need to see in that tightness than to try to guess here.
I'm going to just interject here because Kem, you did type BA, so if you were maybe perhaps referring to Bank of America.
Symbol this whole time.
No, he typed BA, but if you meant BA as in Bank of America, which is BAC, that's a different story. But that's not what you typed. You typed BA.
Oh, that's okay. That was a good tutorial on Boeing. So, but that at least makes me, I feel a little bit more comfort for you. If so, this would make more sense. Now let's take a look at BAC. See, I just made that slip. So we've got a nice base here that it came out of. Remember, bank stocks were acting pretty good around this time, where a bunch of them started coming out of bases. So now you've got after you break out of a base, you got that pullback to the 50-day and coming back to the top of this base. This isn't a play that I almost never make a pull back to a moving average play. It's just a very remedial play. I think it's like the most obvious stock trade you can make. If I do make them, I will make them in the beginning of a new bull market. If I miss something that appears like I missed this stock, maybe I was just at the time, I was still so bearish on the market and nothing really was working for me. There's a few rogue stocks that just held up and blasted off and never formed a really solid right side, but they're just so strong. And now I realize, you know what? Those are leaders, man. Those things just never came down with the market. I might buy the first pullback to the 50-day as it turns back up. Again, it depends on where it happens. All right. That technique, I'm not likely to do that in the late stages of a bull market. In the early stages after a bear market, I'm much more likely to try something like that in something that appears to be a key leader. It'd have to be super strong, high relative strength. In this situation, you got a gap up here this morning. You could have certainly tried to play this. In hindsight, you could see it's up, but I wouldn't play this. I don't play the pullbacks to the moving averages. That's just not the way that I do it. I tried that. I actually tried using moving average, like pullbacks to moving averages and moving average crossover techniques. I tried all that for years. I tested everything under the sun. I studied other market wizards like Linda Bradford Rasky, uses a lot of pullback techniques to the 20-day, and she's got great rules. I think that it probably is profitable, if you do it correctly. But I just found a much better way to skin the cat that I found was much more profitable and much more skillful. Again, if you can perfect or get good at a technique or a style that requires a lot of skill, it's sort of like going into business and having protection against competition, having a barrier to entry. So if it's a technique that anybody can do, like anybody can calculate a moving average and say, well, the 5 period crossed the 20 period. I mean, if it was that easy, every statistician would be worth $1 billion. It just doesn't work that way. So when you have to get there by using a technique that requires skill, there's a barrier to entry, and that's why it works so well, because there's a barrier to entry. That's where the opportunity is. We talked about efficiency, and that if you can calculate everything in a spreadsheet, it would take all the inefficiencies out, it would make it fully efficient. There would be no opportunity. The opportunity lies in the fact that it's something that is not easy to do, and it requires skill, and there's gray areas, and that's why. But once you get good at this, there's not many gray areas. I can bring up a chart, and David and Mark are going to see virtually everything that I see. I won't even have to say a word. Well, there's some nuances that we'll point out to each other, and I'll say, yeah, you're right, that looks great there. But the big picture, we're going to see it all, because this is what we do, and we're on the same page. But to most people, they look at and they wouldn't see 5% of what we're seeing. It just takes time to get there. Once you get there, though, here's one last thing, Bob. Don't forget your question. Yeah. One last thing is that one thing I realized very early on, and I think this was very smart of me, being a kid that didn't grow up with much education. I was smart enough to know one thing, and that was, I said, once I get this down, nobody can take this from me. This was really a key thing for me early on that made me stick with this, because like a job, you get a job, they can fire you tomorrow. With this, this is the greatest opportunity on earth. There's unlimited opportunity every single day with instant liquidity. My wife and I just sold an investment property that I own, and we're going through all this paperwork, and I'm doing a 1031 exchange, and I'm dealing with lawyers. And what a pain in the butt. All this stuff going on that I got to deal with, all this paperwork. I might just tell my wife, I said, this is why I love stocks. I can hit a button and be 10 million liquid in 1 second. And then 1 second later, I could be 10 million invested. It's amazing. Absolutely amazing. Once you get this skill, this is why I say knowledge for life. Master Trader Program, knowledge for life. No one can take this away from you. Not only can they not take it away from you, you could pass it on to your kids and to other people. That's the beauty. I'm passing this on. Dave's passing this on. I mean, what a beautiful feeling that we're able to affect other people in a positive way and change people's lives financially, and more than just financially. With passion, give people something to have passion about. So no one could ever take this from you. It's well worth the investment. Well, see, I'm in the convincing phase now. I'm not trying to convince you to buy something from me. Okay, I'm trying to convince you to buy into something, some strategy. It doesn't have to be this strategy. But I know one thing: if you don't buy into something, you will never have you'll never have the conviction and the commitment to be good at it. regardless of the strategy. It doesn't matter. My strategy, whatever you do, I'm just asking you to go fully and be an expert at it and go all in on it. If you're going to be a value investor, great. Learn everything that there is about value investing. Go find the best value investors, whether it's Warren Buffett, Bill Miller, whoever. It's not my thing, but find the best, emulate them, learn everything you can, and forget about growth investing. Just be great at value investing. If you're going to be a growth investor, forget about value investing because they're not homogenous. They don't go together. Trust me. The stocks that we buy, the value investor wouldn't go near. Not 99.9% of them that wouldn't touch. They're actually selling them when we're buying them. But we can both be profitable. But you gotta make a commitment to that strategy that way and be an expert at it. Go ahead, Bob. I'm sorry.
I think I might have forgot.
That's why I said remember. Isn't it?
No, I know. I got the questions. So question is being asked to the panel. Do you guys ever use hedging or offsetting longs to, when the market volatility is increasing, what do you do in those circumstances?
I very seldom do, but I know, Dave, you do at times, and Mark, you probably done some hedging, but I think, David, you probably do more of it than we do, right, Dave?
Yeah, but most of the time I just keep on going to cash. I might sell a few stocks short, maybe some, short some QLDs or spiders or things like that. But most of it is just cash is the best, especially when the market is coming off. So some hedging, but not huge positions.
Yeah. Mark, I mean, I hedge occasionally with a market short position, and I don't even really call it. Usually it's a directional bet, and it's sort of a default hedge where I might have some long still, and then I'll go short the market. If I get stopped out of the longs, the market comes off, it offsets it. But usually my shorts for hedging become market directional bets, and then I try to hit it big or basically break even or lose a little. They're like all or nothing bets. Usually with most of my market index shorts that look like hedges, most of the time I get stopped out and I actually lose money or I break even because I'm hoping to get stopped out. I'd rather be in the stocks and have my stocks hold up, my short stop me out, and then the longs go up because I'm going to make more. I'm going to get leverage with the stocks. The stocks are going to go up more than the market indexes. But Mark, do you do much hedging?
A little bit similar though. It's more kind of like if I can't back into a risk that's sort of a standalone trade, I usually don't. That I won't do it. Meaning. So it's usually to offset some longs, kind of like you described. I used to do, or like sometimes I would look, same type of pattern though, like say on a bond chart to go long bonds against stocks if I was a little nervous, but if they were breaking out. So I'd take a tight stop, low risk entry as sort of like a de facto hedge. I don't really do that anymore. Plus, I think with all the stuff the Fed's doing, I don't know that bonds are a really good hedge for equities anymore. But that was, I really just, use forced displacement. Let the market put you into cash and then, based on the setups, let me get reinvested that way. I've found if I get really obsessed with the short side, sometimes I'm not paying as attention to, this would be more like when if the market's in correction, like where you're trying to catch a bottom or if you're short, then I'm not paying attention to what were the stocks that are holding up the best and what are going to be where I'm going to be redeploying capital on the long side. So I just tend to focus more on the long side now.
There's a key thing that Mark just said, and some of you may not have understood or fully understood what he said, and it's really, really super important. He said that, yes, he will hedge, but only if the hedge stands on its own. If so, what he meant by that was that he's not going to just go in there and sell some counterpart short just because it's in the same group. It has to meet the same criteria, that stringent criteria of a low risk entry point. And even if it wasn't a hedge, it would be a sound bet on its own. Like looking at it from just looking at that stock all by itself, I'm not going to go long a stock unless it's set up properly. And I'm not going to go short a stock unless it's set up properly and it's a directional bet as well. I think that's really a key, because if you just start hedging and, one thing against the next, you'll make money on one, you'll lose money on another, you net break even, you never get anywhere. Diversification, as O'Neill always said, diversification is a hedge for ignorance. One of the greatest things that, was ever said to me, because it is, if you have an edge, the last thing in the world you want to be is diversified. You want to be as concentrated as you possibly can, up to the point of where you don't get into a risk of ruin situation that, your risk is going to put you at jeopardy for getting, whether you're getting stopped out multiple times and you can blow up simply because your risk of ruin is too great. So up to an acceptable level of risk of ruin, you want to be as concentrated as possible, right? I mean, that's how you're going to make the most money. Margin raise your risk? Well, yes, but margin also raises your reward. So if you have an edge, then you'd want to be on margin, right? It's only when things turn bad where margin's bad. When things are good, margin's great. So it's all about risk. Once again, it just all comes down to risk and making sure that every decision that you make is a quality decision on its own. I short-term trade around positions, or I'll hold positions that maybe I financed the risk from my short-term trading. Both of those sides, my swing trading, my longer-term trading, and my short-term trading, are all profitable ventures. If I did any one of them and eliminate it, let's just say out of my whole repertoire, I have intraday trading, day trading, swing trading, long-term investing. Each one of those, if you said, Mark Mינארווני, you cannot swing trade or day trade anymore, and you took that away from me, I would be a profitable long-term investor. If you took long-term investing away from me, I would be a profitable swing trader and day trader. If you took those two away and you took long-term investing and swing trading, I would be profitable at day trading. All three of those operations are profitable. They're not like I'm going into one just to offset the other and it's some extracurricular activity. They're all profitable. Otherwise, you shouldn't be making the bet. That's the moral of what
Mark, one stock I wanted to point out that I took a small position in is Nutrien, NTR.
And is that today?
Yeah.
Okay. Just now?
Yeah. And then it was also just put on swing trader.
Did you see that 550,000 share spike, Mark?
No. You see, now you'll see that big reversal on volume a few weeks ago.
Yep.
I'm
not too fond of that.
What?
I'm not too fond of that, but go ahead.
No, that they reported earnings. The earnings were good. They beat. They actually raised. But on that same day, Mosaic reported in the same group on the same day, and that got hit hard because they actually missed, and I think it just affected Mosaic, not Archer Daniels. MOS.
I just brought it up because I forgot to put this on my screen. But yeah, go ahead.
MOS. If you see MOS, you'll see that reported they missed, and that stock has kept on going down. It hasn't completely fallen apart. I mean, now it's below the 50-day, and I wouldn't be buying that. But
so NTR did not report?
They reported, they beat, and they raised.
Oh, gotcha.
And so, but on the same day, Mosaic, I think, influenced the whole group, and that's why everything came down. But you see, this didn't follow through on the downside. So, but it's starting to turn back.
Dave, it looks ominous, but it's only 8% off the highs. So it's really not a very big pullback.
Well, and you know how sometimes people sell on earnings. I mean, it was I don't like when it reverses and it's big volume and then it keeps on following through. The fact that it didn't keep on following through and it stayed above that 50-day was a sign that, hey, maybe there's something different. You look at another one in the group, CF, and CF has just gone to it's gone to new highs and has just kept on going. Mm. So the group itself, I think, is still in good shape. So I'm just pointing that out. It's a cyclical stock, and I know you guys don't like cyclicals, but there are times you look at some of the moves that the cyclicals made from, up, these things had huge moves in like the 2005, 6, and 7 period. I mean, they had.
You're right. You're right. I've traded some cyclicals, very profitably at times. But the two things about cyclicals is I don't trust them for the longer term. So if they've been going for a while, I start to get skeptical of the later stage bases because they don't have that secular, like you said, there's a few periods in history in the last 50 years, there's like 2 times where they did well, but growth stocks can do well even in a bad economy. So I just don't trust them as much, but I will still trade them.
Yeah, well, I mean, you could say the same thing for Nucor too.
Absolutely.
That's exactly a pretty big move. It's already doubled off of its first base.
And that's as cyclical as it gets. It's a steel company.
What?
That's as cyclical as it gets. It's a steel company. That's a hard cyclical.
But the infrastructure bill was just passed, so that's and that's over 10 years. So, but that could have an effect. But some of in the other group, in that steel group, are okay, but they're not that strong. I mean, I guess Steel Dynamics is having a good day today.
Yeah.
Steel got hit, but it looks like it's coming back. So it's just, it looks like the money's going to steels, fertilizers.
Hey, real quick. So the CDXS, I'm still in my little position here. So it's acting better here. What I want to point out is this is a 5-minute. Notice what's happening right here. Right here, little cheat area. You see, no different. It doesn't know any time frame. You're going to get the same chronology of wringing out the towel and we're getting the supply out. So you come off here, you break out, you put in this little, this almost looks like a power play. It fails, and now you got a base there. Now it has to rebase, and you set up this little cheat area, and now you're breaking out of the cheat area, right? So again, we have people that use these techniques on day trading very successfully, and they use intraday charts. I don't do that. I probably could make lots of money if I did, but I don't. Even when I day trade, it's off of the daily chart. But again, I do have a 5-minute here, and I am cognizant of it. Most of the time, I don't even have it up. I just have this screen this right here, this chart up. But I can minimize it and look at the two. But there you go. You've got this little cheat area forming right here. Now, if this breaks down and it takes out this low, which is only 90 cents away, on a much smaller level, this would be a base failure. So, if you were maybe, trading this from a short-term basis, that would be, now that it's had a chance to go through the morning, reestablish itself and start turning back up here, that'd probably be, if, you were putting on a super, super short leash, that would be your out. Maybe below 37 now, that's where you get out. Let's see. Yeah, NUE is doing pretty good here. I'm happy about that. So
hey, Mark, I have to run.
Gotcha. You have a job, huh?
Vacation's over for me.
The natives are restless over there.
Exactly.
All
Okay,
right, Arusha. Thank you.
I really appreciate you taking the time. We're going through Market Smith and everything. Thanks a lot. Probably the next time I'll see you will be on like an IBD live or something.
Yeah, for sure.
But yeah, thank you very much. Appreciate
definitely.
it.
No, thanks for having me. And I always learn a ton here, as I mentioned before. And thanks everyone. So I'll see you soon. Feel free to reach out too. All right. Okay. See you guys.
Thank you. Bye-bye.
Well, all righty. So there was a question. All right, so we answered the hedging. Okay.
Another thing I want to point out here, do you see how serene the day is here? You see, it's pretty calm. You see how boring it is? This is trading. I know people think they're screaming and yelling and we're trading everything that's moving and we're in every move. No, not at all. I am so selective, and so I watch stocks every day go up and down and all over the place, and I'm not in them. I'm not in 99.99% of every stock that's moving. I'm not in, and Mark Ritchie as well, and David too. We're super selective. We're picking our spots, waiting for the pitch. And until those pitches are coming across the plate and we're connecting to those pitches, we're just sitting back, watching like that tiger, that cheetah in the weeds, just waiting and not, I think, who was it? It was in Market Wizards 1, I think. Weinstein said, the epitome of a stock trader, or is the cheetah waiting in the weeds. And not only does that cheetah wait for an antelope to come along, but a lame one that's injured and can't run well, because that animal knows that when they go after, they make that run and they make that move, they're going to exhaust a lot of their energy, and they only have so much energy. And if they exhaust themselves, they'll starve to death if they don't make that catch. They have to go for a high probability catch. Right down to animals in Africa in the wild know about risk reward, that they have to only take, so they have to wait until the probabilities are as high as possible. Otherwise, the ones that don't adhere to that management of their resources, they die, they starve to death. Same thing. We're waiting in the weeds, waiting for that perfect moment, and then getting very, very aggressive. And much of my return, and same thing with, Mark Ritchie and David, much of our return is captured in a very small window, but we're always watching. Go ahead, Bob.
Yeah, the the question was asked, what about where you mentioned if you have that first trade, you're up a couple $1,000s, now you're playing with those profits. What if you have a loss first? The question was, are you going to trade the next trades the same way and play them out for what they are, or would you be quicker to take your profits and chip away at those losses?
Okay, it's a very good question. It really depends on, how big the loss is, if I've had previous losses, where I am in the framework of, if I'm up real big, and I might see, I'm going to go into the day with a mindset, and really, I always kind of know where my comfort zone is. Like everybody has a comfort zone. As your account builds, you have a comfort zone of what is a big day, what's a great day, what's a bad day. For some of you, I have a good friend of mine. I've been friends with him for almost 40 years. He just called me the other day. He's probably on here right now. My friend Jeff. He has a small account. He just started trading, not long ago, and put a few $1,000s, and he's grown it up to 5,000. He called me the other day and said, I think he was up $800, and he was all excited. And it's not like $800 is a lot of money to him, but he's just looking at it percentage wise, and he's just trying to learn and develop. And he's like, that I'm up, whatever, 15%. So now you have someone else, and might have a $50,000 day to get excited, right? So that number has got to be personally established as to what. So I really, all my decisions are based around, my own personal comfort zone. And again, so to answer your question, sometimes, I'll chip away, if I get myself in a situation where I don't like the loss I'm at, I'm maybe at the cusp of being at an unacceptable loss. So to me, anything more than mid-single digits goes into, that's like the yellow zone, and almost the red zone. Double digits are red zone. I do not ever want to have a double digit loss ever. So that's sort of what I try to avoid at all costs. So when I get into a low single digit, I might still take a few aggressive moves. Now I get into a mid single digit. Now I might try to chip back and just erase that loss and get myself back to break even, so I can start getting aggressive again. I get down to big single digits, low double digits. Now I'm at DEFCON 1. Everything is all about just minimizing risk and not losing anymore, and coming back really slow and chipping my way back, because the last thing I want to do now is get myself in a deep hole. I'm already in as deep as I want to go. Now I've got to really just chip away. And this is the part that's really hard for most people. And Mark Ritchie is really good at this. He's good at not getting himself into real trouble in the first place. And when he even knocks on trouble's door, immediately backs off and comes to chipping back up. And this is where, we're very much alike. And that's why we very seldom have big drawdowns. And that's sort of the chronology of it, of how I look at it. It's hard to do, though, when people, they start getting that loss and they want to get it back. And then what'll happen is you'll start chipping up and you'll take these little tiny positions, but the market's right and everything's taken off and blasting off. And you're going, oh man, if I just took a big position, I'd have it all back. But what if it didn't work out that way? It's always easy to look at that side, but what if it didn't? And then it kept going down. Now you're at a 15% loss. And maybe one more time it happens. And now you're at a 20%. Now you've got to dig out of a real deep hole. And now that decision of not incrementally coming back small is even way more detrimental, because now the more of a loss you create, the more loss is going to get you way worse off, because remember, the math works against you, right? You're down 25%, takes a 30% gain to break even. You get yourself down 50%, you now got to double your account. You're at a $100,000 account. You knock it down to 50 grand. You've got to double the account now. See, it works geometrically against you. So as you come down, that decision is going to change, and it has to be with your own, within your own risk tolerance as well. I know you guys are looking for a lot of black and white answers, and a lot of these are, there aren't black and white answers, but believe me, I'm giving you really good answers. Just you got to learn how to apply the mechanical rules and apply your own tolerances and the experience all together, and it'll all work for you. Go ahead, more questions.
A couple quick ones.
Let's accelerate the questions here, because we want to answer questions.
Yeah, a couple quick ones. One of which is asking, Dave, do you ever take day trades? Like, what would it take for you to sell this NTR today?
No, I don't like day trading, because then if you're day trading, you have to make so many decisions every single day. It's kind of, I like to get a position in a stock. I like to know it fundamentally. I like to try to stay with it as long as I possibly can. And as long as the stock is acting well, then I'll go ahead and continue to hold on to it. But no, I'm not gonna cut it out. I could, if the stock reverses and closes down, I might sell it out. I mean, I'll do that on protecting my cost and protecting, taking a small loss. But the stock starts out nicely, and when I usually buy a stock, I'm expecting it to go higher. That because I feel I've timed it well enough. And so, if it finishes right where it finishes, I'll continue to stay right with it.
Yeah, he could by default turn into a day trade if this stock reversed and had a big reversal, and now he sells it to protect himself. Yes, by default it turns into a day trade, but that's not his plan to have it as a day trade. I always say, try to approach your risk from a short-term angle, and approach your reward from a longer term. So be a day trader and short-term trader on your risk, and a swing trader and a long-term investor on your gains. And that's just, cutting your losses, letting your winners ride. But that's where you want to create, once again, that asymmetric leverage in everything you do. Percentage-wise, days held, everything should be largest loss versus largest gain. All of those should have a positive ratio, and you should be creating that asymmetric volatility. Keep in mind too, today we're trying to find something to trade, to have some examples and to show you something. You came here and you want to see trades. We can't make the stock set up. If they're set up, great. If they're not, we can't do much. So we are, if there's not much here, yeah, we're definitely trying to stretch the envelope a bit here, or stretch the rubber band and try to make something out of what we have here. I'm not sure I would probably take these trades. I mean, they're like I said, they're fine. I mean, they're not terrible risk reward plays. The CDXS is fine. There's nothing wrong with this. But again, it depends. If I'm, not doing really well in the market, or I went to cash and I want to take a few pitches, I might just watch this. See, the other thing too is, I think we have to keep in mind, the one thing, part of the discipline is that, and this is something that Dave mentioned before. He said when he I believe it was yesterday, where he said about talking to his children about investing. And I should have sold this. I should have bought that. He said, there's always going to be another trade. You know, we're not worried that we missed this one and it doubles. Oh my God, I missed that. Who cares? There's a trade every day. There's a trade every week. There's a trade every month, every year. There's going to be trades. This opportunity is always there. That's what's beautiful about it. There's instant liquidity and always opportunities. If you're going to get concerned about anything, be concerned about the downside and having those break-even days, and, you know, break even at worst. That's the real key, is that, you know, you're constantly trying to just keep yourself where you're out of trouble. And then if you can stay out of trouble for all the time that things are difficult, and you can just get those 30, 40 days out of the year where you have those, you know, 10, 15% of the time you're in the right place at the right time, you get that 100% return. It's all about saving bets. It's all about saving bets. Everything, if you notice, everything that I do and I talk about, there's an incredible congruency with what I tell you and what I've taught you. You're not going to find that I'm going to do anything or say anything different than what I previously talked about. My trading is going to be completely congruent with what I say and what I teach, what I write in my books. Everything is, I'm consistent as they come. You know, there's not, this is the same thing over and over and over. It's actually, like I said, it's very boring. It's very boring.
Mark, question being asked is, do you sit in front of your screens all day long? Do you ever get up and take a break? And what do you do with your positions when you get up away from the screens?
Yeah, well, it depends. I mean, I could tell you right now, if I have 50,000 shares and it's a $5 million position, I'm not walking away from my screen. I am definitely not walking away from the screen. So it depends. If I'm super heavily invested, I am on top of it. I also have assistants, and, you know, I'm fortunate to be able to have other people to watch for me when I'm away. We can watch for each other. I have alerts, and I also can put in stops depending on the position size. If I have a really big position size, I sometimes put in staggered stops. So I'll put, you know, you got 20,000 to sell, I might put 5, 5, 5, 5 down, I don't know, quarter point, you know, whatever, spaced, and have a staggered stop. It depends. Again, there's not a black and white answer, but yes, I very often in midday, I go play my drums. You know, it's only right in the next room. So I'll go and take a half hour and go play some drums, and or I'll take a walk around my neighborhood. It really depends. You know, things are really, really light. There's days where I got really small positions. There's days I just put my stops in and I run up to my shooting range in midday. Sometimes at 12 o'clock, I go to my shooting range, which is only 15 minutes away, and I go there and I go shoot for an hour or two, and I come back at 2:30, 3 o'clock, and I watch the close. And then there's other times where everything's moving, there's breaking out, there's all stock set up. That's it. Boom, strap in, and it's game time. And I'm in here every tick, watching from morning till close, and there's not a tick that goes by that I don't see. So it really, it depends on like what the opportunity is laying out and what type of level of investment I am. This year, I've been doing tons of short-term trading and just being super, super aggressive because, of course, I'm trying to win the U.S. Investing Championship. So I've been in front of the screen a lot. I mean, I'm really here on top of things and doing lots and lots of trading to try to compound, as much as I can. I pulled out every trick in the book that I ever known in my entire trading life this year. So, and it was well needed, but very difficult year.
The stock SI, another good example of a market this year. Question being if Friday was an entry using a pullback buy technique.
A pullback buy. Again, see how this is how easy that you could get off of the fundamentals. Remember I talked about Vince Lombardi, blocking, tackle, pass, catch, run, the basics. What happens is, what I find is that most people who try to do this, They think they got the basics down, but 5 years later, I'll have a session or a conversation with some students or some people that have, come to Master Trader Program a number of times, and they'll be coming up with stocks that don't meet the most basic criteria. Sometimes it's not even in the stage 2 uptrend, and they drift and drift and drift. But again, remember, pullback buys, as far as, again, I'm just talking about what I do. I don't know a thing about what anybody else does, but I know everything about what I do. I know my system inside out because I developed it. All these vernaculars, squats, reversal recoveries, VCP, low cheat. I invented these. I coined the phrases. I came up with this stuff. So I'm an expert in this. This is what I've spent my life at. So I can only tell you what I do. Now, a pullback buy, I'm only using a pullback buy within the base. So is this within a base? No. Is it? This would be maybe, if this was a handle or a pullback, let's say from a breakout, I see what you're looking at. Maybe you're looking at this as a breakout and this is a pullback. Okay, but it's extended a ways from the breakout. This is the pivot. This is up here quite a bit. And you're talking about this day here, right? Friday, Bob?
Yep.
Not today.
Correct.
Friday, yeah. So anything is a pullback buy. If it pulls back and turns up, it's a pullback buy. So you can find a pullback buy a 1,000 times in probably 1 6-month price movement in a stock. You're going to find it everywhere. They're all pullback buys. I can go back here and find pullback buys everywhere. There's a pullback buy here. It turns up, right? I mean, there's pullback buys everywhere. You just look back here. Pullback buys over here. Over here, you pulled back, you turned back up. You have to put it into context. Just like the chart patterns, the VCPs. Well, if you have a chart that's real tight, moving sideways, if it just got cracked, it's below the 200-day, that's a ledge. That's a shorting situation. But that same situation in an uptrend is very constructive. So a lot of times the exact opposite, or exactly what you're looking for could mean the exact opposite depending on the context. So you have to put it into context. Everything's relative. In this situation, the answer is yes, it's a pullback to the 20-day. It's a pullback buy, but it is not a pullback buy that I would take. You can go back and look at a stock and maybe it finds support at a certain moving average and trade it every time it pulls back to that moving average and turns back up. That would be a pullback buy technique. I have not found that to be profitable. Usually that's in hindsight. One thing about moving averages and these type of buys that come out of the bases and are very obvious is that what we found is that by the time it becomes, you see that trend, you see that, each time it pulls back to this moving average, it rallies and bounces off. By the time you establish that, everybody else has established that and it becomes efficient. The inefficiency is already out of it and it's now efficient. So sometimes in hindsight, it works and you can go back and you can find some situations that hold a certain moving average, but they're so infrequent that it's to me, it's not worth it. I know I digressed quite a bit off of the pullback buy question, but again, no, I want my pullback buys to be in a base. And I guess here's a perfect example, the NUE. So you see how right here, this is the right side being built. So we're building that cheat so that we pull back within the right side. We've got a nice, well-developed cheat area, nice big base form. We got VCP. And now this is a pullback buy right here 2 days ago, which was on Friday, and that's where we bought it. That's a pullback buy to me. And again, you might say the same thing, pulled back to the 20 days, turning up. What's the difference? Difference is that this is coming out of a nice, well-formed, large base. That's the only difference, just as to where I'm applying it.
ARQQ would the big sell off from a few months back be too worrisome for you to buy?
So I like what you're looking at here. I mean, this is a nice, well-formed VCP. So the very first thing that I do when I'm looking at a chart is I measure it. Measure from here to here. So the decline is almost 70%, 68%. That is a problem. Now, does it mean that it can't work? It might work. It might work. Now, the next thing I'm going to measure is I'm going to measure the pivot point, the area that I'm buying this. So from here to here, okay, so this pivot right here, right, from that high to that low, let's measure that. That's about 15% or so. Okay, we'll call it 15%. Is that single digit? Nope, it's not single digit. So the risk is high. The risk, it's still not tight enough on the right side. Now, could this work?
He actually bought it on the 17th, Mark.
On the 17th.
Right there.
It's right here, which is okay. Okay, great. But again, you're definitely having to use a mathematical stop, because if you bought this coming out right here, which looking at it from a VCP, it's great. It's a great buy. But now again, measuring the risk, this is pretty volatile, all right? So even if we use the pivot, it's 17% below the pivot, below here, 25%. So this stock could act normal, could come all the way down to the low of that pivot and act perfectly normal, and you'd be down 17%. You see, so you couldn't manage the risk and allow the stock to fluctuate normally. So that's fine. You could use a mathematical stop. But even with that, let's just say, I'm not sure how this panned out, but let's just assume that you bought this breaking out here, and then intraday it pulled back and then took off. Okay, it broke out in the morning, then I'd have to look at it intraday, but so it pulls back to here. So see, this came off about 7-8%. So you could have been effectively down 7-8% and got stopped out same day if you used an 8% stop, and then the stock ended up taking off. Now, I'm not saying that happened, but that could have happened, and that's the type of risk you're taking with the stock doing absolutely nothing wrong whatsoever. It's still holding in more than half of the previous day's range, and you've got this big fluctuation where now, see, this is a bucking bronco. So what I want to see is this. And even then, I'd have to be careful, because yes, you do have some serious overhead supply with such a big decline. But what I want to see is this. Oops, sorry about that. I want to see it get super tight. See, and then come out from there. Now, if I can get that set up, now I start measuring this pivot, and it's really tight. So now normal action, or abnormal action, I should say, if it breaks out and then comes back in and takes out the low in that pivot area, that abnormal action is within acceptable range of risk. See how I'm using risk as a selection tool, right? I'm backing into the trade based on how much risk is on that right side. Not to mention, that's not the only reason. The other reason why I want this to get super tight is why. After all this, I hope some of you can answer this question. All right. If we were alive, I'd ask for a raise of hands, and then I'd start asking everybody to tell me. So the reason is because we want to get an indication that supply has stopped coming to market, right? And the more that quiets down and the tighter it gets, the better off. And the more supply that we have, potential supply with this huge decline, we need this to get really tight. I mean, we really need this to tighten up. Now, let's draw a line across. So there is where your line of least resistance should form, right? Because, again, you've only got 1, 2, 3 days, 2 closes above this level, and 4 days where it traded above it. So, but keep in mind that with such a big decline, you definitely got some very fast trap buyers here down this left side. There's a lot of trap buyers because it's such a big decline. So now you definitely have supply, and you need to really have the deeper it is, the more you have to have the patterns got to be perfect, and you want to see a lot of iterations of VCP. You like to see VCP happening over and over and over and over. And if you look for those, if you look for the large bases that have what we call fractals, this is something David talked about many times before. Last year, we talked a lot more about fractals at MTP than this year, but fractals are patterns within patterns. If you have a lot of these fractals and they get smaller and smaller and you wait until it's super, super tight, this trade can go from a lot of supply to being totally explosive. Because once it's all eliminated, you've really built this solid platform because you've had so much time to eliminate all the supply. There's no supply, and the stock has the potential to explode now. And you'll get these. Look at the workbook. You'll see some of these large bases that get real tight. But you're going to find that the examples and the ones that I traded that are in the workbook, you're going to find that there's almost none of them are going to have these. I don't think one of them is going to have a 70% cup, correction. So I would pass on this. However, if it's so tight where this right here was a couple, maybe 2%, I would take it. And I'll tell you the reason why. With such a small stop, I got to look at this like poker hands. I got to think of it as the next 1,000 hands. Okay, so this is going to be, say, more failure prone. Just say, generally speaking, this, if we were able to grade this, and this is not aces, this is a pair of tens. So tens obviously are a lower probability hand than aces, right? Okay, so what does that mean? We've got to make up for that. So we're going to need more tries. So we don't want to take a full stop. So if I could get into this with a 2% risk, I can now try this 4 times and still achieve that same 8% loss. You see how my thinking is constantly mathematic? It's thinking, okay, so what would be a normal loss? My maximum loss is 8%. This is a low probability trade, so maybe this takes me 2 or 3 tries to get it right. I still don't want to lose more than 8%. So now I got to take 2% stop, 3% stop, and give myself more opportunities. I'm thinking long term. I'm thinking bell curve. See, I'm constantly thinking bell curve. I'm not myopic. All right. I'm not myopically looking at this. I'm myopically looking for the tightness, but I'm thinking bell curve. I'm constantly, this is what I was telling you guys before in risk management, that once you start running your numbers, understanding all the numbers, as you go to make a trade, the spreadsheet makes its way into your trading. And you start thinking in terms, in mathematical risk-reward relationship terms. You would never think like this. I assure you one thing. After the risk management section and after all this that I talked about, you will never look at a stock trade the same again. I will guarantee you that. You will never look at a stock trade again the same way. You will, every time you look at a stock trade, my little voice will be in your head. That mathematic equation concept will be in your head, and you'll be thinking about this. It will make its way into your thinking automatically. I just planted a seed that you're never going to be able to remove, and it's a good seed. So what you have to do is you got to get those seeds, get the right seeds, and plant them in there indefinitely, and then have the discipline to let those things grow in the right direction and to be disciplined and stick with this and make sure that every decision is made. You're making a good risk reward bet. Quality choices. You make good bets. You play poker, you make good bets. You come out a winner. It's all, you're not going to win every hand, but if you make good plays, good risk reward plays, you play high probability hands, you get odds on your money, you're going to be a winner over time. It's all about high probability situations and getting odds on your money. That's it. High probability situations, getting odds on your money. That's what it's all about.
Wash, rinse, repeat.
Yep. And you're getting the famous Mינארווני rants now. This is what happens. You start spinning up. It's like a tornado. And just before you know it, you got a full scale category 5.
Mark, I sent you earlier. I'm not sure if you have it on the same computer or I could email it to you, but there was a question if we could go through one of the earnings announcements and the option calculation. So I sent you the screenshot of the pricing that you could show on your desktop.
So you sent me a screenshot.
I did on Skype, or is it you want me to email to you?
Okay, so I see this over here. It's on I have Skype on my other computer. So what are we looking at here? We're looking at a way to figure out the probability of the potential move.
Can you show that on your screen, or can I email it to you?
I have to go on Skype over on this
I
computer.
can email it if that works.
Sure. I guess. Yeah. Email to me.
So we do happen to have a position tomorrow that does have earnings. So just
Which one is that?
PSTG. After the close.
PSTG. Yep.
So in the example that you have in your workbook, this will be a real world example of what you just look to calculate. And when Mark gets this, you can put it up.
And I usually make my decision whether I'm going to hold for earnings in the last 15 minutes of the day prior to earnings. So we'll check this. We'll check the options pricing if there are options on it, and see what the implied volatility is. And then I'll give it right to the end of the day to see how it acts. And then from there, make my decision whether I'm going to hold it or not, unless maybe I, for some other reason I sell it. Hold on one second. I got to see. Hold on. Again, I'm. Oh, there we go. Okay. Let me just pause my screen for a second. I'm actually just going to freeze it, and I'm going to try to go over and get my email. Hold on. Can you guys hear me when I'm paused?
Yeah.
Okay, good. All right, let's see here. So, okay, so here it is. Let me see. Can I download this? All right, I can save it as an image. Hold on. Tough to maneuver here with the. Okay, here it is. Okay, so let's hold on. Let me bring up this. All right. Whoops, wrong one. Okay, I'm sharing. You see my screen again? Yeah. Okay. All right. So everyone can see this. We're looking at this stock here, which has earnings coming out tomorrow. And here's the options pricing. Might be a little bit blurry, but this is the best I can do. Go ahead.
Zoom in one more time, maybe. So what you're looking at it with the stock price being close enough, 27.5. We're going to look at the call, the 28 highlighted there.
We're going to find the closest strikes, right?
Yeah. Now, the one thing I will note is that this is a good example of a stock that only has options each month. So this is December option, which means it's a whole 4 weeks away. So you have a lot of time premium in here, not necessarily.
The closer, the better, right, Bob?
Yeah. We would ideally want the current week, where you only have sometimes the very next day, is the best.
Going to be more accurate.
So this is going to where we're going to pick the 28 is the closest call above that price of 27.5. And you can see on the left of that number, the value is $1.50. And then on the 27 put, the closest to it on the downside is $1.35. To the right of that is $1.35. And those two premiums added together is $2.85. You divide that by the price of the stock, close enough, $27.50. And in the next 4 weeks, by the third Friday of December, is what the options market is pricing in a 10%, just over a 10% move. So not quite as good when it's the near term weekly. Then you get really accurate to see the.
But what that's saying is that on earnings tomorrow, there's the potential for a 10% move in either direction.
Either way, right?
Either way, that's a pretty big move. Yeah, that's a pretty big move. So that means that there's real potential volatility, and we have a 3.3% profit on it right now. So that is taking some. That's taking some risk, probably, taking a full stop risk. In this situation, probably would reduce, cut it in half, or sell it all together and just say, okay, didn't make much money on it, but just step aside and not take that risk and move on. And if it happens to gap up tomorrow, so be it. But you can make that, at least have, some an educated guess to get an idea. Now, even if it's half of that, it's going to be 5% move. That's a pretty good move. But generally speaking, with the bigger names like a Amazon or a Netflix and using an option that's really close in time, you're pretty accurate. Sometimes they're off and it fluctuates more, but you get a pretty good idea. Let's just put it that way.
Yeah, and it's not uncommon for, of course, momentum names, which are volatile and have the potential for big moves, one way or the other. As Mark said, is you have a Snap or a name that is very common to be having 5, 6, 8% move in just a matter of a day or two from the near-term Friday option. That's something you take into account. But if it is a little bit more of a slower, stodgier kind of name, that might only have a 3% move or sometimes even less, and you have the profit that Mark talks about cushioning, accommodating that kind of move against you, you obviously always a position size accordingly, but that's exactly what the process is that we go through.
Yeah. Marcus Smith seems to be having a problem all the way to their, I can't even log on. I'm on another screen here and I can't even log on to it. So
yeah, it's pervasive right now.
Definitely having a problem across the board. Yeah, they're having a server issue. Yeah, wow.
And now
nice
that
timing.
Exactly.
Great timing for us.
Look at the full bearish engulfing on SBOW.
SB as in boy?
Yep. OW.
Oh, yeah, of course. Yeah, now we're down 6%. So now, again, here's a perfect example. Remember I said, how does that loss feel? If this stock turned around and went up, you're saying, oh boy, wish I didn't take that loss and put that tight stop at break even. Now it's down 6.6%. And all of a sudden that loss feels great. Oh, I wasn't even a loss. I broke even. That break even feels great, right? Again, nothing changed. Nothing has changed. Still, it still got I still have the same break even. But this is what's been happening time and time again in this market, where you get these breakouts and you get the retail breakout. And like I said, runs into the institutional selling. And before you know it, you're engulfing and imploding and undercutting pivots and bases. And this is why I've been really crimping up the loss cutting and trying to really create as much asymmetrical leverage as I can.
If you look at Build-A-Bear too, Mark, just to make a point similar on chasing gaps, if you chase this on the open, and if you look at the intraday here, almost everybody who bought this is now flat or underwater.
Yep.
This is why you don't chase them. And it wouldn't surprise me if this just doesn't roll over here at the end of the day, because everybody, all the retail guys, like you said, they ran it up and now right back down, and it doesn't pay. It just doesn't pay to chase these gaps.
Nope. O'Neill said chasing stocks is like crime. It doesn't pay. That's what he said. It's true. It's true. Yeah. You don't want to chase these. This is what David said that early on, he's buying stocks way up and extended, and then they come in and now you're underwater and you got a big loss and the thing hasn't even just broke out. So sometimes they're just pulling back normally. It's not even really an abnormal move.
Yeah, but Horizon, this one, that theme has been persistent all year.
Yeah, all year since February. Hasn't changed. Has not changed. I think it's worsened, actually. More questions?
Yep. Question. I was hoping David would be back. He looks like he's taking a break.
I wish we could have had fireworks going off today and done a whole bunch of real exciting trading. That would have been obviously fun and maybe profitable. But we can only again take the pitches as they come over the plate here, and just not much really to do here today. A couple things that came out fairly low risk, and a few that TMST still acting really well. To see if we get this one to reverse. This is a pretty big move here, big, huge volume, relatively speaking. This will be interesting to see if this can hold up. And to right up, we actually got through that old high there, and now we're just pulling back right there. So, but you see again, look at this big VCP, and it's not a coincidence that they come out right on schedule, and this is where you get that that big move. I know some people It'll be hard to convince you that you think that because there's this pattern is why it breaks out, but you couldn't be any more wrong if that's what you think. And if that's what you think, you're really going in the completely wrong direction of convincing yourself of using this properly. This is the effect. It is not the cause. I assure you that.
Question, a couple quick ones here. Do you ever look at your market two or market depth for making trades or purchases?
No, I just look at the spread. I'm looking at the spread. I have on my other screen here, my other computer, I have a big 22 or 23 inch, whatever it is, that has my trade station on it. And if I want to, have anything at the same time, a bird's eye view, I like to have where I can enter my order while I'm looking at everything. So I don't have to change screens. So I have a level 2 there too. I'm just looking at bid and ask spread because if I take a really big position, I don't want to have a wide spread. If I'm in there buying 20,000 shares, 50,000 shares of stock, and it's got a 2-point spread, I'm not going to start at a $40,000 or $100,000 loss right off the hop. That's insane. I don't care how much money I have. I'm never doing that. So, I'm looking for the spread to either be relatively tight or I'm going to have to adjust for that risk, that spread risk. And then even if I do go into a stock that has a wider spread, I'll watch it real carefully. And sometimes the bid will start coming up. And as it's moving, the spread will narrow and I'll start buying it in the direction. That's another thing. If you're buying a stock that has a wide spread, you better be buying it as it's moving in the direction of your trade. It's even more important. You got to be real careful. If you start buying a pullback or bottom fish in a wide spread, it's already at a 2-point loss, right? Maybe the stock's 271 by 269. You're at a 2-point loss. And now they open it up to the downside. They start bringing it down. And before you know it, you're down 4 or 5 points, just like that in literally seconds. So that's where you got to get a little forensic in there, particularly if you're taking really large positions. I mean, there's sometimes with this trading championship thing, there's been times where, and not often, but there are times where I've gone in 4x leverage in one stock, literally the whole account 4 times leverage into one name. They've been very liquid names and I'm in there super short term. And if it doesn't go right on cue, I'm out. Something like, I always say GT, but not because of any particular reason for the stock, but just simply because that stock trades. We bring up Goodyear Tire. I just know that stock trades in 1 penny spreads or so. Say 2272 by 2273. Now I just automatically know that GT is a 1 penny spread. Something like a Ford will be 1 to a couple penny spread, right? 2070 by 2071. That's a penny spread with tons of liquidity. I could go in and buy 100,000 shares of this right now and feel completely safe that if it starts moving against me, I could get right out and I'm not going to have much slippage. But now another stock's trading, 100,000 shares a day, and it's got a 3/4 point spread. There's no way I'm buying a big position in that one. And if I buy even a decent sized position, it's going to be in the direction that it's moving and make sure that that bid and offer is improving. Again, you see, all risk. Everything's risk. Every single thing I do is risk-based, risk first. The upside, notice how I almost never talk about the upside. It's all risk. Even my selection, even going in and selecting the trades is based on risk. ARQQ, perfect example. I'm staying away from this because of the risk and I'm looking at it. I know what I need to see for the low risk to even take a high risk play. This is a high risk play because of the big decline in the overhead supply, but I know what I need to see to take that high risk play at a low risk entry point, if that makes sense.
Mark Ritchie, you look at level 2, market depth.
I don't even subscribe to it. No, that doesn't answer the question.
What's a level 2?
Exactly.
Real quick question. I think we answered this on Tuesday, but How much
Like,
does,
these dumb asses make all this money?
yeah,
Yes, it's
Does
very
taxes come
very
into play?
uneventful here.
how much does taxes come into play, if at all, with any decision to be buying or selling a stock when you sell?
Yeah, at a 50% tax rate, oh, it comes into play at the end of the year. I can tell you that. There's how it comes into play. I don't think of it at all, not one iota. I make every decision based on the chart. I've never made a decision based on taxes in my entire life.
Mark, Richie?
My goal is to make as much money as possible and pay as much taxes as I want to pay as much taxes as I can, not percentage wise, but the more taxes I pay means the more money I'm making.
Yeah, I've always found this kind of baffling. I don't understand. I think people think about it wrong. It's like, would you rather have no gains? To Mark's point, hey, you don't have any taxes if you don't make any money. People squabbling over, even long-term, short-term. Look, the reality is, if you make a lot of money, it just sort of has a way of taking care of itself. Obviously, I always want to owe taxes. It means I've had a good year. So, but never in terms of has it ever entered the process in terms of saying, well, if I sell this now, I'm gonna, have, or I should hold on to it so I can realize a different, some type of tax gain. No, I think that's a fool's errand, personally.
I guess if December 31st, was the 1 year where if I held the stock one more day, I had to pay taxes. If I held it one more day, I didn't have to. Maybe I would, try to hold it that one more day, backstop it, and I would hold it that day.
And I'll play some names occasionally for a longer move, or like portions of a position that I've financed. But even then, I've never said, well, where am I in terms of how long I've held this and what the tax treatment's going to be? I'm still just looking at the chart, looking at, has it closed below, say, the 50-day or the 10-week, and using the same type of violations I would use. I'm not sitting there ever letting tax determinations dictate trading decisions.
Yeah.
David, are you back?
I am back. Yeah,
Okay.
and I same thing. It's so painful to pay taxes, but you should never let taxes influence you to hold a stock when it should be sold. I mean, I guess, if you're getting close, you can always maybe buy some puts against the position or do something like that.
Collar it up. Yeah, you can collar it up.
I mean, there's some, but no, in most cases. But then on the other side, that's why every time I talk to, especially college students, I say the first thing you do when you get out, you open a Roth IRA, because this is the only vehicle where at least now they're not taking away your money out of your Roth or I have a traditional IRA, and it's amazing how much money you can have after you compound for a number of years and something like that, when no one's taking anything out of it. Then I hear rumors of, well, if you get your IRA over a certain amount, they're going to start coming for you. So maybe that's not even safe anymore.
Well, that's a good point, Dave. I mean, if you can have a SEP plan or an IRA or a pension plan, 401k, KEO, and you defer, certainly that's a good idea to put money and into a tax deferred account that then you can compound and defer the taxes. That's fine, but we're not selling a stock or buying a stock. That's what the question is, whether we're buying and selling a stock based on taxes. But using a tax deferred vehicle is a great idea.
Dave, question for your NTR was being asked, are you using the low of the pivot here as your stop, or where would you have your stop?
Now let me take a look real quickly. Oh, I can't. Is anybody getting markets missed charts yet?
No.
They've been out.
They got a real server issue going on here.
Never experienced something.
You can see Mark's screen though. He has it up.
Well, then I'll go 7%, but then Well, yeah, I would use use the low of this last base, this tight area in here, which would be L67. Well, I guess it undercut
This low
that
here,
whole-
using this low here, the 67, or over here?
Let me see. No, yeah, I mean that low right there. Yeah. So if it turns and comes back down below, then I'll probably go ahead and sell it out.
Today.
Oh, today.
Yeah.
Yeah, or tomorrow or the next day. I'll use that for at least the short term. But then if it starts making more progress, it breaks out of that 72 area, then I'm going to be moving it up.
Right.
Okay. Question for all three panelists. What is your market exposure currently?
Market exposure. Well, I told you I sold everything. I went to cash to start fresh here today, but I'm in one stock, CDXS. I'm 99.99% cash right now.
And Mark Ritchie?
Yeah, around 30%. I took a lot off last week and week and a half.
30% invested.
Yeah, and I'm probably 40%, but I sold a number of things, or I sold some more things down today. So I still have some positions, but I just don't.
You got
like
some conservative wizards here.
Yeah, well, I don't like losing. I don't like holding a stock for 3 weeks and then in one day I lose more than half my gain. That's not what a stock should do, but that seems to be happening.
Yeah.
So it's just giving me feedback that it's becoming a harder market to invest in, and so that's why I cut them back and reduce the exposure.
Yeah, it's all about getting a plan, putting your plan into place, and then getting feedback, and then reevaluating, analyzing that feedback. What does it mean? And then once again, rinse and repeat. So again, we're not seeing these stocks move the way that, and sometimes you can even get where there's a lot of stocks making big moves. This is where it really gets tricky for someone who's new. Let's see all these stocks, and every day there's stocks making headlines, and this Bitcoin, this SPAC, this one took off and was up huge, up 75%. This IPO blasted off, RIVN, Dow's up 300. But we're looking at the volatility. We're looking at what did it take to get, did you have to ride the bucking bronco, or did you ride the nice, quiet horse that just walked you across to the other side of the corral, or did you have to ride this bucking bronco and risk breaking your neck? So it's how you get there. Remember I said, whatever gets you there takes you to hell. So we're watching and seeing, how's the market acting here and what is the risk? And then right now, I guess we're all determining that the risk is high. The risk is definitely above average right now. None of us are willing to really be super heavily invested at this point. And if the market goes higher, we're not going to be like, oh, we made a wrong decision because of the result. Remember, everything has to be, risk is managed in real time. Hindsight has no business in your trading. Looking back and saying, I should have, I could have. It's meaningless. It's absolutely meaningless. Do post-analysis and take a look at if you followed your plan properly, if you're following the rules, but you don't do post-analysis to say, this stock went up, so I should have held it. No, that's not necessarily true. The rule does not justify the means. This is the example and the metaphor, or the example I was trying to drive home with the one who runs across the street with his eyes closed and his ears closed and makes it to the other side. The other one looks very carefully, gets hit by a car. Again, which one of those traders are you? Which one of those people are you? Do you just run into traffic and make it to the other side? Well, that's not going to last very long. It's not going to last. That's just luck. Or now, however, you might be making very low risk trades and stopping out, and you're getting stopped out repeatedly. and you're losing money. And meanwhile, this new kid who just been trading for 6 months is up 50% in this month. But is that repeatable? And can he keep that? What's the strategy for keeping those profits and for managing risk? I assure you, the lucky guy is eventually going to blow up, and the disciplined guy is going to eventually get big returns and hang on to them. A lot of illusion with the market. The market is like a Venus flytrap, this beautiful thing that just says, come in and sit here and enjoy. It's wonderful and everything's so pretty and there's all this upside and all this potential, and look at all these people that made all this money. Meanwhile, gobble you right up and swallow you, and without you even realizing you're sitting in the mouth of a lion the whole time. And so it's a very risky place, and like I said, risk has to be managed.
Is the handle on Lily, LLY, would that be long enough based on that base?
Yeah, absolutely. Yep. I mean, I know this is a lower RS name. At least I believe it is. I still don't know. Can we get Market Smith on it? Man, taking one of my my big tools away here. No Market Smith. Wow, this sucks. So Lily was buyable on Friday. And to be honest with you, I mean, a big cap name like this, breaking out, you get this squat, I'd probably just stay with this, unless I had a gigantic position. And I'm not going to go overnight with a stock that's not acting right. But, regular size position, this had a 1-day pause right here, which I call a pause pivot. You drifted back here. Now, I don't know exactly what the RS is this. It looks like it might not be too bad. You got a big base here. So what do I do? First thing I do is I measure. Let me get rid of my floating bar here. So I measure it. Okay, so this is only about 20%. That's beautiful. That's perfect. 20% pullback in the cup. You build this right side. You got a nice little handle. The handle drifts back. And now you pause out for a day. So that was, that was buyable on Friday. Now you got to look for reversal recovery. You got to see it hold up here. Preferably you want to hold this low, but take a look at the risk. Let's just say we bought it coming out right here. You draw this line again, right? Let's right across this pivot point right here. You see not much trading, right at that level. So that's your line that you want to start buying. It might have to, as it comes up to these highs right here, right? If we just move this up to where now it's redefined itself on that breakout. So maybe you got a little supply here left, and we gotta wring out some more water out of the towel, right? So we come up here and maybe we pause out for another couple of days, and from there, and now that would be a breakout. It would improve, and you'd get a 1, 2, 3, 4, a 5-day reversal recovery. If I own this and it was to tighten up and then reversal recovery, I would add to it. If I did not own it and it did this, I would purchase it. So that's how I would handle this. And if I owned it now, I would probably either just maybe cut it in half on today's undercut of the low, or just hold the whole position and keep my stop. And you could use very easily this low right here, which look how low this risk is. It's only about 3.5%. So this is a super low risk trade if you use the low of this pivot. Now you can marry the two. You can use a technical stop and a mathematical stop. So a lot of times what I'll do is I'll say, okay, so my maximum risk, if I went into this with a maximum mathematical stop, would be 8%. So 8% is down here somewhere, right? Okay. Well, what I sometimes I'll do is I'll say, let me use a technical, because if it takes out this low, that's obviously not acting right. So I'll use that stop as my half of my position right here. And then I'll just stick with the mathematical stop. Let's just call it down here of 8%. And now what I've done is I've improved my worst case scenario, right? I've improved the stop, so call it 3 and 8. That's 11. Half of that is 5.5. Now I have a 5.5 stop. Right here would be my average. I'd be getting out around 250 on average. And I've improved. And I'm using the technicals and I'm using the math. See, I'm making a good decision. I'm making a good risk reward play here. As long as I'm buying from these bases, I got all the characteristics. this is all you can do is just position size accordingly, make a good risk reward decision based on math, based on technicals, and that's all you control. That's all you control. And do that enough times and get it right and make good high probability bets, and you'll be a winner over time.
I'm not going to use the name, but the question is asking about RIVN. And this is a classic example to me of what you're just following a name, a story, the momentum or whatever. Why are you even looking at this thing? What is it that could possibly be appealing?
He's not
to?
using the name because he's afraid I'm going to dismantle you. He's afraid I'm going to go nuts and pull an O'Neill on you. And no, I mean, what does this have? Is there one thing about this stock that we've talked about in the last 7 days? Not one single thing. There's not one, doesn't meet one single criteria. This stock has now fallen 40% in 1, 2, 3, 4, in 5 days. You think there's some overhead supply? I mean, you want to talk about trapped buyers? This is one volatile ride. A friend of mine just bought this just recently and was up big on it. Bought it as it started turning up and then gave it all back. Like I said, what gets you there takes you to hell, right? Keep remembering that. See, you buy this on the way up with no rhyme or reason, no base. It comes down, no rhyme or reason, nothing. There's nothing to ascertain here except a stock that ran up and down, and there's just no way to predict, to know there's no basis, there's no reference points. You're just starting to build some price action to even have any technical reference points. So again, this doesn't meet any criteria. Your guess is as good as mine. This stock could double and triple from here, or it can go down 50%. I don't know. I have no idea. But it doesn't meet my criteria. Certainly not a low risk entry point. That's for sure.
Somebody's asking if Ford is set up before today, but was that set up big long enough to be buying that today?
To me, so first thing I'm going to do is I'm going to measure it. So this went up 60%. No, this is a short stroke, little play here. No, it was set up over here. This is where you came up. You made a little cup with handle. I would have to measure that too, of course. Let's see. So from here, breaking out from this low, you're about 7%. So this could have been bought right here. See, I'm looking for single digits on the right side. And this broke out right here. And then you've got this natural reaction. Boom, tennis ball action. And now this is like your second or third natural reaction. So actually, if this moved up from here and I was in this name, I'd probably already scale out of some. And then this moves up much from here, I would sell right into it. That's how I would look at this. It hasn't moved up enough to be a power play. And it's just extended now and coming out of a second or third natural reaction. So I would be looking to nail down my profit into strength. Again, you want to be looking for the larger bases. If you just keep shortening the time frame, before you know it, you'll be buying. This will be someone will call this a base right here. I've actually had people ask me if that's a base. 2 days, moving sideways. This is what happens. This is where you just, I call it slip a bit of too much of this. You just keep slipping and slipping and slipping. You get shorter and shorter with your time frame, and before you know it, you're trading 1 minute charts on day trading. There's got to be some lines in the sand. Otherwise, you're just going to be trading everything. And when you're like that, it's usually, like I said, I tweeted this recently. Most people like the idea of being a trader. I could find out right away if somebody's like infatuated with being a trader more than they want to get rich and want to be great at something. The first question they'll ask me is, how many screens do you have? Like, okay, like that matters. That's what they want. They want screens wrapped around their head and feel like a big shot.
What do you mean?
Remember, this is fake. This is fake. This isn't real.
Although Bob does have a lot of screens, but that's because he does a lot of jobs.
I do.
He does a lot of jobs. But yeah, how many screens do you have? I've heard that question so many times, and my goal is to have one. I want the least amount of screens. When I was in New York City and I had hedge funds. We had a war room. I wasn't in the war room. My assistant, my trader, I had a trader that ran the trade desk and would execute for me. He had 14 screens in front of him and 7 behind him. There was 21 screens. And it was back when the screens were like big and thick and they were hot. And we used to have to keep the place. So we had a special air conditioner in there because we had to keep the place cool. There was so many computers and electronics, and we bring people in and they'd be so impressed. Wow, these guys must really know what they're doing, man. Look at all those screens and all those wiggly lines. But I've made my best trading on a laptop, sitting literally in my lap, sitting on my couch.
Yeah, when I won those U.S. investing championships, I was in a cubicle that was probably, 6 feet by 6 feet. And I had to share a bunker Ramo terminal that would, swivel back and forth between
That'll date you. Bunker
myself and another person. I had no screens. No one had computers at those times. We used to mark up the charts with our pencil to update the charts. We didn't have all this stuff.
The Quotron. Yeah.
Yeah. When I was trading in the beginning, there was times where it took 25 minutes to know if I bought the stock or not. The stock's running up and I'm like going, boy, I hope I got it. I hope I bought this stock. It was just amazing. It would take forever sometimes in a fast market. I don't know if you remember, Dave, or if you were as unfortunate as I was, but they wouldn't answer the phone. They just stopped answering the phone. It was just crazy. The brokers, the market makers, they just stop answering the phone when things got too fast and you're stuck.
Right. But one thing I wanted to address, and you've probably already touched on this, is that why do we have so many rules and so many things? Your number one key is to eliminate the emotion out of your trading. You've got to get to the point where you're a robot. You see the information, it all clicks, and you buy the position, you set your stop. There should be no emotion at all during the trading day. And that's why you want to go by rules. And when I've done my best, it's like that's all you're trying to do is execute every single trade exactly right, and forget missing a stock, forget doing that's when the emotions start coming in. That's when you make poor decisions, and it's all about greed. You shouldn't be saying, well, I've got to make money because of this. It's like trying to win a sporting event. Let's say you're an individual, I can relate to tennis. You're so concerned about winning that you forget exactly what you should be doing on the court and what strategy you should be employing.
Absolutely.
So that's why you have to use rules, and you have to get your emotions, and anything else that could come into that decision is just going to mess you up. So it removes the emotion, removes the greed and the fear from your decision making, and you'll do much, much better.
And one of the reasons why you want to keep your losses small is because I assure you, when you start racking those losses up, you get much more emotional and the pressure builds, and you start making decisions in a very different way. David said that after he won the U.S. investing championship 3 years in a row, that 4th year, he had so much pressure to perform, that he was the golden boy at that time. I remember he was in the cover of the Wall Street Journal. Back then, the Wall Street Journal used to cover the U.S. investing championship. You got your picture on the cover of the Wall Street Journal. It was big time, and a lot of pressure. He's working for O'Neill, got to represent, and then that's where you get that pressure, and the rules go out the window, and you start making these crazy decisions. Really, really important. I used to do that with my shooting competitions. I'd go and like right off the hop, I might have a couple bad stages, and I'd start thinking, oh man, first place is out of the question now. I just blew it. Those 2 stages put me out of contention. I'm definitely not going to come in first or second. And I'd start getting so upset about that and thinking about that. And now next thing you know, I blow another stage. Now I'm going, oh, 4th or 5th is out of the question. I really blew it today. When in fact, there's time. Once I got out of that type of thinking and I just went into process, I changed my whole thinking. I'd be like, okay, wouldn't it be great if I could, have a start like this and finish strong and then finish second or first and just let me just go for it and just stay in process, and whatever happens, happens, and just forget about the result. And then I started winning. I started winning shooting competitions. Same thing with trading. Real important that you maintain that mindset. Those of you who have not read my mindset book, you really should, because I think it's the most important part of all this, of trading. I think the mindset is the absolute biggest missing piece of the puzzle, and that most people don't really hone down and really understand themselves enough to position themselves to do well. All comes down to mindset.
Yep. Good comment here, by the way, which I'll expand upon, but Anish, who I mentioned earlier, is making a comment that last year when he came and had the 200+% return, 222, I think it was, he was doing that work in a full-time job, seeing patients all day long. He had only 45 minutes a day to trade. And just like for our private access service, we have clients in over 68 countries around the world in all time zones. My Australian clients, Philippine, Japanese clients, they're sleeping when the markets are open here. They're putting their orders in at nighttime.
True.
And people do that. Just go back to the Nicholas Darvis days, but ultimately, you have clients of ours who are operating, on a global basis in all different time zones, not needing to be in front of the computer and see everything.
Some of them killing it, making.
Margaret Smith is back, gentlemen.
Oh, good.
Yeah,
is that without the beep I heard?
I typed that for you.
Good. Oh, yeah, there it is. Yeah.
That's the other benefit of the swing trading time frame that we are traditionally trading, holding for weeks or months even at times.
Yeah. Let's see here. I was bringing up Market Smith before to look at that Lily. Relative strength, I think, is in the 80s. Yeah, 86. So, this looks pretty good. You got the earnings, got pretty good earnings. The estimates are kind of crappy going forward, but those are just estimates. So this looks pretty good. Let's see. So we're down to the last half hour. We only got 30 minutes left. We're concluding 7 days of. By the way, this is, I don't think I'm going to do a 7-day program ever again. Just want to let you know. So this is probably the last time I'm going to do something of this length. So this was really, an experience, I think, this time. I added a few special guests, and interviews, and just, it was a lot of fun. It was a lot of work, long and tiring, but definitely, I think, I think the online, as much as the in-person, is definitely a lot of fun. And I know we just get hundreds and hundreds of emails of people that they want to come online, they want to meet and greet and have fun together, and that's great. But I also think there's a big benefit to the online. The online just seems to me like you're more focused on it. I think you can learn better online. But it's certainly not exciting and it's fun. That's for sure. I love meeting everybody. But hopefully down the road, maybe next year or something, we'll have a live event and we'll be able to, whether it's a Master Trader program or not, I do plan on having some type of live event going forward. So maybe we can do something, hopefully. Let's see. Well, any more questions here? Our last 30 minutes. Not really.
People are asking, look at AD&T today, a current holding of our private access. not only acting well in the market that's fairly a lot of red, but even developing a nice pivot.
Yeah, it's okay. I mean, it's pretty good. I think, I would like to see this optimally to, maybe add to this position. I'd want to see it stay tight. If it can go maybe inside for a day or two, that would be nice. Come out here, something like this. Even if it came out tomorrow, it went inside. You can definitely add to it. Now, this is a decent base, and you've got some shakeout here in the right side here. Let's bring this up on MarketSmith. DNT. So you got a pretty tight right side. There's a little bit of volume here. You did have earnings, so around earnings you will get some volume. There's this one day where it was elevated, but and again, we're not seeing. This looks like this is not. Hold on, let me just see here. Yeah, okay. Sorry. Look at the earnings here. So you've definitely got an expected breakout year here, so that's good. Recently, you don't have the earnings, so we're really trading off of the technicals here, recent earnings, and you've got some deceleration in the margins, but it looks like this might be trading on some forward-looking fundamentals here. Let's look at a weekly. It's a pretty good weekly, decent base here. You got some nice closes here. You can see weekly close at the high, weekly close at the high, and then it goes real tight here. You got 3 weeks, almost 4 weeks, perfectly tight here. So yeah, I get this is one that if you don't own it, if it breaks out from here, you could buy it. If you already bought that half position, you could add to it. Let's go through some more questions.
Rama is asking, why are you not adding to your NUE as it's moving through the pivot?
Yeah, I was going to add to that today. It came up on a little bit of a gap. I was just watching it here to see if it could. I thought maybe it might stall out a little bit here. Not perfect. I already made a play that I think is stretching a little bit. Okay, so this initial entry with the 50-day sort of in a downtrend here on this right side, not fully developed. I feel like I already made a little bit of a stretch. So I'd like to see this really set up perfectly here and consolidate on this right side and give me a fully developed right side. And then from there, I would add to it. If not, if I'm wrong and it just takes off, okay, well, then I have a half position. I still have a half position and I'm still going to make money. So yeah, that's the reason. I just wanted to see this really, and I show you, I drew that in there before I took it out now. Maybe it's over here. Hold on. Sorry about that. Yeah, I was looking for it to set up and tighten up and then add from there. I still think that might happen. I still think that could happen here. So, but yeah, sometimes I do. Plus, again, I haven't seen really great progress where I'm looking to get aggressive. There's been a lot of stocks that have stopped out. It's just the reward has not paid for the risk unless you're taking these short-term plays. I mean, the way things have been playing out, we should be selling today, not adding. That's the way the market's been playing out. Is you get these couple-day pops, and then the next day they come crashing in. And before you know it, you're underwater. So you got to be careful about pyramiding up in this type of market when the moves are 1 to 3, 4, 5 days. Just erring more on the side of conservative right now.
Was a question here for Mark Ritchie. Comment just basically about crypto. I know, Mark, you don't really trade crypto. I don't know if David does, but Mark Ritchie, any comments you could share of Mark's methodology being applicable to crypto or anything for that matter?
Well, look, it's applicable to any asset class. The idea of volatility contraction, low risk entry points, and thinking risk first. I don't care what you're trading. That's how you know, if you stuck me in a prison cell and made me trade, I don't know, some asset class I'd never heard of, that's what I'd be using. You know, so any trades I've done in crypto would look just like some of these other buy points you're looking at.
Yeah. Mark and I were talking about that not too long ago, and how some of these are just set up, you know, perfectly.
Oh, I think some of the crypto charts of why, because they're inefficiently priced. At the same point Mark's been talking about, they've got less eyes on them, and some of the charts are textbook.
And Mark, similar question though, specifically about ETFs.
Yeah, I don't. To a certain extent, yeah. I mean, ETF, that's a pretty vague term. How many ETFs there are right now? And an ETF could be a managed ETF. It could be a index like the S&P 500, which is one of the most liquid, random, efficiently priced indexes on earth. And it could be an ETF that trades 13,000 shares a day and has gaps between every day. It's just too vague of a question. Can you apply it to ETFs? Sure you can. Depends what ETF, but do I trade ETF? No, I trade stocks. I mean, I occasionally trade ETFs. I was in the SOX index for a little move there for a little while. I think, I can't remember when we bought this. It's back here somewhere for a short-term move. But if I want the semis, you know, sometimes I'll trade an ETF like the SOX, because the semi group is such a large group. It's got so many stocks in it. And it's hard to sort of key in on the leaders in there, because there's several hundred names, or at least, you know, 100 plus names in the semi group. Sometimes I'll just trade the index, particularly if it's an index that has pretty good moves. If it moves like a stock, sometimes you'll get an index that moves like a stock. It'll go up 30, 40%. I mean, here's a perfect example. This, broke out here and it's ran up about 16, 17%. That's pretty much, what you'd get out of a stock. You're getting it from a diversified index. So, I'll trade them, but I find that it works best with stocks, and with the less efficiently priced, the less followed names, or lesser, I should say.
Seeing a lot of questions, guys, with a lot of ticker symbols asking Mark for their analysis, which are not buyable, which means you probably already owned them. So again, you learn Mark's selling rules, selling into strength. You learn Mark's selling rules with the violations. It's written in Think and Trade Like a Champion. This is where you need to start applying and integrating what you're learning into your plan. You have to follow your plan. What was your plan when you bought the stock? Is a comment that Mark makes all the time. Is your plan to sell it at 10% or 15% or 20%, or not even use that, just analyze the price? But you're asking a lot of questions because they're down today, and you want to, looking for Mark to say, oh, well, it's down today, so sell it. He's not going to do that. If your plan is that you're holding it through whatever pullback, or, take some profits. You have all the variations that he's gone over. So I see a lot of questions about stocks that are clearly up. You must be in them with a profit based on some of the names you're typing in, and down today big. That's going to be his answer.
I mean, I'm sure we can go over tons and tons of stock symbols, throw stock symbols at me, but really, that's really not teaching you, whether I would sell a stock that's up, and it's down on the day. It's really, what would you do? And you should already have rules in place, and you should know certainly where you're selling at a loss, and have some type of rules in place for how you're going to handle profits. And with what you just learned, this is the real thing that you need to think about, is with what you just learned, what does it look like? Like, for instance, why don't we take a stock? Let's take one of those symbols. Let's just, instead of saying what I would do, let's just apply what we've learned and see what the stock is saying. Give me a stock that's up.
All right. Well, one, before we do that, DKS is being asked for a setup.
I know it pretty well. It's a cup setting up here. I think it's wedging up a bit here, and you've got, after this gap, this is an extended stock that it could work. It's not my favorite. I don't like when you get a gap like this and you get an acceleration in the rate of advance, and then you set up after that. It's not my favorite setup, but that's being certainly a stickler, but do you have a base here? Absolutely. It looks like let's see, if we go back, here's the bear market low. You've got, even if we call this 1, 2, 3, I would say this is a fourth stage base. So this is definitely getting late in the move here. So it's going to become more and more obvious. I would be careful. But let's get a stock of someone that, is questioning whether it should be sold or not. And let's try to apply the selling rules.
AMD.
AMD. Okay, that's a good name. Okay, so AMD, let's take a look at it, get some perspective, right? All right, just taking a look at it. So this has been in an uptrend for quite some time here, right? You got a little acceleration. I just wanted to get some perspective on it. So this stock is recently broken out right here. You got the little cheat area right here. It did have a little bit of a gap, but didn't get away too much. This could have been bought right here on that cheat. So the last buy point from a base, and once again, I got to get rid of there you go. The last buy point from a base was right here, right? Now you came out 1, 2, 3, 4, 5, 6, 7, looks like 7 out of 9, 10, 7 out of 10 days up. Great. That's a great breakout. Follow through days. I mean, really, really nice. You got a pullback here. 1, 2, 3, 4 days. And then boom, tennis ball action. 1, 2, 3, 4, 5. Looks like 5 out of 7 days up. Acting great here, right? So now you got another natural reaction, and now you come back into new high ground here. So now, for looking at this, remember what I said, after you get a couple natural reactions, certainly in the later stages of a bull market, you're probably looking at 1 or 2 natural reactions. You want to maybe start thinking about nailing some profits down. Early stages of a bull market, maybe 3 or 4 natural reactions. After that, you usually start getting volatility and you start having to undercut previous lows, and you make bigger pullbacks. So at this point, I mean, if you bought this here, you're up 50% today, and now you're getting this reversal here. I mean, I probably would already be selling into this strength right here. But has it done any violations? That's the real question. Has it done any violations? The only violation is that it's made a big move in a short period of time. So you've got a really great gain. It's very extended. And you're now coming off of 2 natural reactions. So, this is the time, if you're a short-term trader, this is the time where you probably want to start protecting, or even a swing trader, you want to start protecting. I don't know, Dave, you're looking at this, no real violations, right? But made a nice move. How do you handle this, and how do you read the chart?
Well, as you said, it's really had 3 nice moves up, reversing today. This is where I actually bought it as it was coming. No, I actually bought it on that like 2-3 day pullback down.
Over here.
No, a little farther. Keep on going right there.
Yep.
And when I saw it undercut and I gapped down on the opening and started really reversing, that's where to the upside, that's when I really started buying it, because I actually missed it coming out of that downtrend or at that earlier buy point. So I said, I got to get into this thing. It's so strong. So at this point, I've cut the position by 2/3 because it's had a very, very nice move. And I don't like how it like today it traded higher and is closing close to the lows of the day. That's not a good sign. The other thing you can do is maybe sell calls against it. You can buy some puts. There's a few different ways you can do it, but I just basically sold 2/3 of the position.
Yeah, and you made a nice profit on it. That's the name of the game here. You're not going to go broke taking 50% profits, and when taking 5 or 8% risk. So certainly, the reward to risk, you've got a great move here. So I'd be long gone. I mean, 50% is a gigantic move for me on a trade for, a month or 2. I just sell into strength. I don't even wait for the stock to break. I get out when the getting's good, and I usually sell right into the upside. I'm almost always selling into strength. And the only time I'm usually selling into downside is if it gets into trouble unexpectedly, or if I have a partial position, I'm trying to play it for a bigger move, and then it just doesn't act right. But I'm almost always just selling right into the strength and getting out when the getting's good. But nothing wrong. Certainly nothing wrong. See, here's the thing too. You got to put it into context. Let's just say this is coming out, and this breakout right here is around a follow-through day, coming off of a bear market low. That's an entirely different story. Now, this powerful first leg up, yes, it may correct and come back, but I might sell part of it, but I'm going to definitely hold on to a piece of it, because now I might be on a key leader. Late stage, with a bunch of stocks starting to blow off here, some of the leaders blowing off, tape really fractured, and not much participation. To me, this looks like a little mini blow off move here. I'm looking to take profits in that scenario. So again, depending on where it is, but the main thing is not to worry about whether it goes higher or not. Did you make a decent profit for what you risked? I mean, if you just made these trades and you took 7 or 8% stops and you sold just arbitrarily when a stock looked like this, you'd come out pretty well, and that's the main thing, is to make a decent profit. We're not going to get this perfect. You're never going to get the high, or almost never. You're just not going to get this perfect. That's not what trading is about. Anything else?
Quick question on Crux, CROX. Is this another example of a short? The short setup there.
Short set? I mean, a short stroke setup.
Short stroke, yeah.
Yeah, I wouldn't buy this. I spent my whole life perfecting how to buy stocks properly at the low risk entry point and getting them out of consolidations. I want to buy the stock perfect. All right. This thinking of buying it after the fact, or if you miss it, my goal is not to miss it. And if I miss it, then I look for another one. You see, I want to play aces. I want to play kings. I want to play queens. Again, in the beginning of a bull market, I might play a first pullback in something that showed tremendous strength. I might even make that play like David just made with the AMD, where if this is breaking out in a new bull market, coming off of a bear market, that first pullback, I may buy as it turns up from that first natural reaction, just because this may be a key market leader. So there's times I might do that. But what I'm trying to do is get in here and not miss that. And what I feel like, it's almost like when I dropped out of school in the 8th grade, and I was a musician. I actually dropped out to be a musician, and I was very successful as a musician. That's where I got the money to a bank. I had a recording studio, and then I took that money and put it into the stock market. That's where I got the money to trade, was working as a musician. But I remember people used to say to me, you don't have anything to fall back on. And I used to say, well, the good news is that I don't have anything to fall back on. So I guess I got to make this work, and so there's an upside and a downside to not having something to fall back on. So I look at it this way. I don't sit there and try to come up with techniques to buy stocks at missing the breakout. Especially when you're just starting, I'm trying to perfect it where I don't want anything to fall back on. I want to get it right. So then once you get this right, okay, you can take a look and say, well, David bought it here. David is one of the best in the world. David Ryan has a giant toolbox. He could trade anything. All right. He knows what he's doing intuitively, inside out. He's been doing it for 50 years. You're not David Ryan. You're not Mark Mינארווני. All right. But you could be. You could be better than us. You could be better than us. The way you will get to be better than us is to start by getting it down perfect, not starting off with complex, esoteric adjacent techniques and get it perfect first. I could tell you right now, when Dave and I first started, we're looking at bases, looking at buying them perfect, got a couple of handles. He studied O'Neill's work and everything, getting it absolutely perfect. Once we got that, we started to understand where all this other price action falls into the continuum of this whole big picture. And we started to realize, yes, we're good enough now. We can trade around the positions. We can make something out of nothing. It may look like nothing. We could figure out a way to make something out of it, because we've been doing this our whole lives. We're pros. We could trade just from feel. We could just trade the tape. Back in the day, Jesse Livermore, they read the tape. They could just watch the ticker tape and make trade. No charts, just watching the tape. It was called a ticker sense. They would get a feel. After you watch miles and miles and miles and miles of ticker tape, after a while, you're not mechanical anymore. You've got some intuitive feel. You don't want to start with that, though. This is what gets me nervous when people come to a workshop and they start already drifting away from the basics, right back to Vince Lombardi: block, kick, pass, catch, run, get the basics down. Then all this other stuff will come naturally. See, I started with a coupled handle. Pattern and flat bases. All right, just started off with this O'Neill. I read Giller, Saucer and Platform, O'Neill, coupled handle. I then realized that, hey, you know what? There's this other pivot that forms a little bit lower. And I started trading that. That was a more advanced technique because it dealt with more supply. Then after I got good at that, that was years and years and years. I think it was over a decade that I traded now the cheat. Before I even noticed there was a low cheat. Low cheat came in the last 12 years, I think, something like that, last 12 or so years. Prior to that, there was a whole decade of cheats. And prior to that, there was a whole decade of nothing but just coupled handles and flat bases. So I backed into those other techniques that were more advanced, or what I call adjunct. But I started off with just one basic thing. When I used to have traders come work for me, I told you this before, they had to trade one chart pattern under one set of relative strength circumstances. So for instance, I'd say you can only trade 97, 98, 99 power plays, or you can only trade 89 and above coupled handle patterns. That's it. You cannot trade anything but that setup. Show me you can be profitable with that. Show me you can be profitable with that for a couple months, at least. Show me you can double your account. Once you do that, then I'll show you something else. Then we'll take it to another level. It's the same thing, and then those of you who have gone and studied martial arts or done certain sports, you don't start off doing backflips. I don't know if you read this story in Trade Like a Stock Market Wizard. I did gymnastics and boxing before I went to karate. I was extremely limber, and I could do back handsprings and all kinds of stuff because I was in gymnastics. My mother sent me to gymnastics, a place called Bill Miller's in Connecticut. So when I went to karate, I used to watch all the Kung Fu movies. I used to go watch the Bruce Lee movies and all the Kung Fu movies. So I was practicing all the crazy things, all the jump up spinning techniques. I didn't even know what I was doing. I didn't even take one lesson of karate, but I knew how to do some of these things from watching the movies. So when I went to karate school, I had this karate instructor. His name was Jack Moscato. He's a stickler. I mean, to this day, we're still very good friends. He was amazing, an amazing guy. He's a champion tournament fighter. He was such a stickler for fundamentals. I mean, to a point where he would, if we didn't do things right, he'd put us in the ring and kick us in the stomach until we threw up. I mean, he'd be in prison right now if he ever ran a school like he ran when we were there. But it was very hardcore back then. You can get away with that stuff. But one day I used to go into school and I do all these tricks. I'd be doing back handsprings. So one day we're all standing there and I'm a yellow belt. I just started. I've only been in there for, 6 months or whatever. And I'm standing into like a front stance or something. And he walks around me and he just sweeps out my leg and I go crashing down to the ground without me looking from behind. He just sweeps out my leg. He looks down at me and he says, maybe you should learn how to stand before you learn how to flip. And hence, his co-instructor, his name was Sifu Dave Gaddison. They gave me a name. Everybody had a nickname. When we went into fighting in tournaments, we all had nicknames. My nickname, which I didn't really like it that much, but I understood why. My nickname was Movie Man. That was my nickname. Instead of on the back of my jacket, it said Movie Man, because I could do all the tricks in the movies. But they used to always tease me. They used to always tease me because I could do the tricks before I learned the fundamentals. And I ended up, knowing how to, I tried to do this real tricky move I was fighting this black belt. His name was Larry Leadfoot Rogers. So you can imagine when you get kicked by a guy named Leadfoot, what that feels like. Larry Leadfoot Rogers, I tried to do this jump up spinning kick on him, and which is, you should never do offensively. And I tried to do it offensively, and he basically just moved out of the way of it and then kicked me in my face and shattered my nose and knocked me out cold. So, and that's where they named me Movie Man, because they said, this guy knows how, you know how to do the backflips, but you can't you can't fight, in basic fighting and win a tournament.
Mark, I hate to interrupt, but I think you should address the market. And one thing that I mentioned,
look at the reversal.
Well, yeah, when the market is in a nice uptrend, it goes up quickly and then it drifts.
Yep.
It drifts very slowly. Well, if you look at just like the Qs today, it opened up very strong, but then it gave it all up and more. And this is where I look to wedging. This thing wedged and tried to break out and started to curve up, but then it just lost it all. That's the situation where it comes down in about 50 minutes, and then for 3 hours, it kind of barely tries to rally. And then it comes off again really, really quickly. Not a sign of a great market, not a sign of a stock if it does that. So, and you had a big reversal, and you're going to get a bigger volume on the triple Qs today on the downside, and that will be, you've gotten a number of those days piling up. So that's I should be careful.
I think the individual stocks have just shown us this already, that we're not seeing many setups.
Yeah.
We've seen a bunch reversed here. So nothing's really working out that great. We got a few that broke when it came out on gaps. So this CDXS, I just sold it. I ended up, I think, losing $1,100. And again, try a few things here with a couple of small, what David calls mental health buys, and just no real progress. SBO is ended up now down 7.8%. So again, just trying to not lose any money, or any real money. And if things were working out here, great. Would have maybe pyramided up and bought a few other names if they were breaking out. But this is how we do it. And I think the action is not good. I don't think the tape action is very good, even going into today. So I agree with you, Dave. And now we were up 300, and now we're up 36.
Bullish engulfing patterns across the board.
Bearish engulfing?
Bears.
Yeah, bearish engulfing pattern. Yeah, we look at the NASDAQ. So the NASDAQ was up 0.75% and is now down 1.25%. So there you go. I mean, that definitely is not the greatest look here. It's one of the larger spreads here. This looks like you probably follow through to the downside. It may be a rally a bit in the morning, but I would guess that you probably follow through to the downside with this type of reversal. Now, this is looking kind of in a microcosm right now, but the Dow, of course, has already been going down, and was in inverse relation to the NASDAQ. But again, did you see it all day? Did you see? You never saw this indices open up. I don't even look at it. I mean, Dave had to just tell me that the market, now we're down, now we're only up 19 points. We're closing basically flat after being up 300. I barely look at it. I really don't. I mean, if all my stocks are down, everything's reversing, well, then, then I know something's going on. I take a look, what's going on with the market here, but I'm looking at my stocks. Even if I wasn't talking with you guys, I'd be focusing on my stocks. I barely look at the indices. And except, at the end of the day, I see how we closed, and then I relate it to the volume. I look for distribution days, but I'm really focusing on the individual stocks. Like I said, I wish we could have had more sparks flying today and maybe done more trading, but this is, again, there's only so much we can do. I'll wait for the pitches. That BBW ended up closing up about 4%, so that came back quite a bit here. TMST, though, ended up having a pretty good close. That's a pretty nice breakout. Volume was big, relatively speaking, at least. So that's a really good breakout. We'll be curious to see if it can hold. A lot of these cannot hold. Next day, bang, gap comes in. We can just a few more questions. I guess this is it. This is the end. I know there's a few people that sent messages and they're like, I don't want this to end. I want this to, I want this every week. I mean, it's a great, experience to learn and to go over all this stuff. But you know what? At some point, you got to get out there and you got to just start doing it. There's I have friends of mine, and I tell this story a lot, where we had one person in particular that came to the Master Trader Program several years in a row. And we used to hear from her quite a bit through emails and so forth. And then she came up to me third year and she said, I said, how you doing? She goes, great. Everything's going great. I love it. And I said, wonderful. How you doing this year with your trading? She goes, I'm just about ready to make my first trade. So it was 3 years later, hadn't made a trade yet. So I want you to prepare and I want you to be careful, but I don't want you to be that careful. It's better off that I wouldn't paper trade, and you don't want to go and risk big money in the beginning until you do this for a little bit, but you got to get some skin in the game and risk enough where you're keeping yourself honest, and that it should be enough money where it's painful. The losses are painful, okay, to the point where it's going to put some emotional pressure on you, but not so much pressure that it paralyzes you and makes you not be able to act. And if you have no money, well, then you just be going crazy and you'll be doing it. There's no consequence whatsoever. So there has to be some consequence. Otherwise, you're preparing for a real fight by shadow boxing, and it just doesn't work. Right? Shadow boxing, shadow boxing has a place in boxing and to prepare, but you have to fight with real opponents, and you got to get hit, and you got to get used to getting hit and taking blows and delivering blows and slipping punches and so forth. So find that happy medium, get in there and trade. You got to trade. That's the number one thing, to find yourself. You're going to find who you are. You want to find out who you are, what you're made of. Get in there and trade. You'll find out and get those results. You got to generate those results. When you generate those results, you'll now have your starting point. You don't have your starting point until you get results. You haven't even started. The starting point comes once you generate results. Then you have a reference point. You can look at those results, see, here's where I am. Here's where I am technically, emotionally. Here's what my skill level is. It's going to lay everything out, and you're going to know exactly, the truth is going to emerge. And then from there, now you got to start making some decisions. You got to be objective. You got to troubleshoot, and you got to start making some changes and start developing yourself as a trader. It's going to take time. It's going to take time. It's not going to happen overnight. If it does happen overnight, beware, because you're probably in for a big hurting, because you'll get a false sense of confidence. You'll think this is easy, and you'll get sloppy. So it's better off if you have some difficulty. People don't like to have difficulty in the beginning, and they go, oh, this isn't working. No, difficulty is good in the beginning. It gives you respect. The best thing that can happen to you is right off the hop, you get hurt. And right off the hop, you see this is dangerous, and then it gives you the respect for the risk, and now you have a chance. You have a chance. But if you don't have the respect for the risk, you have no chance. You have no chance. You're going to have to get knocked out first and take a serious blow, because you haven't gotten the respect for the risk. You're charming snakes. You're charming a king cobra. You got to respect that snake could bite you and kill you with his venom. You have to respect the danger in order to be able to manage it. So anyway, I hope this has been enjoyable, educational, and I want to congratulate everyone for making such a huge commitment, money, time, effort, everything. I mean, this is, already way beyond the average stock trader. There's so few people that would make this commitment and go through this kind of amount of learning and spend all this time. Some of you have watched these and then rewatched every session. Some of you that have literally watched 60 hours of this in 1 week. That really says something about you. Any closing comments, guys? Dave?
Take it, hate to say you're on your own from here, but you have to be on your own at some point. You're going to have to make this your own, and just really learn, go back, review the material in front of you. Look at the things from Investors Business Daily. They've got a lot of great content. You can learn a lot from that also. And then, as I said earlier, the most important thing you can do is learn from your own mistakes, your own trading, your own victories, and good luck. That's about it. I have to take off. I have a 98-year-old father who needs groceries, so I have to make a grocery run for him.
Go make the grocery run.
Yeah. But thank you very much for having me, and again, good luck to everybody.
Thank you, David, for joining us.
Here, Dave.
Really great year.
Okay, we'll see you guys later.
All right, Dave, sign off. Mark?
Well, yeah, I mean, putting everything in perspective, I guess I think I shared something similar, but the first one I went to, I don't know if it was Mark or must have been Mark saying it. I think he got it from Tony Robbins, but most people overestimate what they can do in a year or two, and they underestimate what they can do in 10. And never has there been a truer statement, even in my own trading. I thought I was going to make $1 million in the first year or two. It didn't happen, but I got there over time. And just to encourage everybody, I think the biggest mistake people make is they think they're going to figure it all out right away. And Mark has shortened the learning curve. This workshop and his books and all those types of things are taking the curve maybe as short as it can be, but you still gotta, to his analogy, get in the ring and figure some things out on your own. I heard from somebody who I think this was their third, and he said, it's finally starting to really crystallize for me. He's been trading through these, but going, I'm continuing to get better, and that's really what trading's ultimately about. It's a journey of continuing to improve, and I feel like I'm better at this than I've ever been. So you don't put your pants on one day and arrive. It's just a continual process of slowly improving. So just encourage you to stick with it, and yeah, good luck having the discipline to follow everything you've just learned.
Bob, there are a few typos in the workbooks. There's not many, but over the years we've honed them down. But it's so funny how every now and then we still find something. And I actually found a couple the past few days. Bob, which I don't remember exactly what pages those were in the chat. Just
what we'll do is we'll send out an email blast to everybody, so we'll identify specific pages and the corrections, so you have it in writing, and there won't be any problem understanding it. But yeah, a couple just it doesn't change the concept of anything that Mark shared and taught, just refining some of the math or some of the numbers. So we'll get those to you.
Okay. All right. Let's see.
I'll thank Mark Ritchie for joining us as well and being participant of the Power Play section. And today, that's always a big help, and great to hear another perspective of another really what we define as our poster child of success stories of someone who's taken Mark Mינארווני's methodology and clearly to the same level of the duplicating and replicating the kind of results that Mark is famous for. So, thanks, Mark, for being part of it and helping share your story with everybody.
Honored to be included. Thanks, guys.
Yeah. Okay. So good luck to everyone. And if you can also, I've tweeted a few tweets. I'll probably tweet another one that the Master Trader Program has concluded. You can respond to them, but just give us your feedback, and we'd love to hear your testimonials and if you loved it, because hopefully we're going to do we're going to do another one. I'm going to probably change the format a bit. I think we're going to retire this format and do something different going forward. I'm also considering, based on popular demand, if you will, I'm considering doing a chart school, which is really just all charts, and really just chart reading, and breaking this down into different sort of topics and having more focused in certain areas. So we're kicking some ideas around. We're also kicking the idea around about a university where we actually go through, say, the Master Trader program, and love to hear your feedback on this. If you think these are good ideas, or maybe if they're not very good ideas and you have a better idea, let us know. Where you maybe go, it's 3 or 6 months, and we have a topic per month, and maybe there's 4 sessions per month, and the Q&A is actually more expanded and just more detailed, and getting really deep into each topic and spending almost like you went to school, and as opposed to being, a lot of people say that this is great, but it's like drinking from a fire hose. It's just, that's why I keep expanding it, because there's so much information. But I think to expand it any more than this, we're going to have to get into something like that, where we break it apart and we get into more like a curriculum over time. So just kicking some of these ideas around. But like I said, I think we're going to move to a new format and do something maybe a little bit different, and hopefully even better. If we can improve upon this, I've tried to hone it down to being a pretty, I think it's the greatest show on earth for stock traders, but doesn't mean it can't get better. So give us your feedback on those ideas, and give us your love and comments, and I'll look for them on Twitter, and also keep us abreast of your progress. I'd love to hear about your progress. You can always tweet to me. I'm on Twitter every day. You can send me and let me know about your progress. Love to hear the success stories, and love to hear from you going forward. Okay. So,
and also,
yeah,
I was just going to let me finish my comment, and then what Mark Ritchie didn't just mention is Iqbal, who is the one who mentioned that this is his 3rd year. He's up 120% for this year. So he really is getting it crystallized this year, clearly. So congratulations to you, Iqbal. And what I would just share with you, since I've already talked to a lot of you, and expect a call from me after the event over the next coming weeks, as I do like to have a follow-up call with everybody as well. But that is where, as mentioned, the process that Mark created this for was to help impart you and empower you with this knowledge that you'll have for the rest of your life. And that's long after he's hung it up and gone. This is the value and the legacy of why Mark created it. It isn't for the, obviously, the monies and the wealth has been created long ago. This is now how he wants to be able to pay it back and give it forward. And that's our passion. Our passion is to help each of you, to be able to show you, to prove to you, if you will, to have you believe enough in yourself that you can do the exact same thing. And we have story after story after story after story over 12 years, thousands and thousands and thousands of you who have come to either this workshop or part of our private access community and family, is where I have seen firsthand people who have never traded a stock before go through the progression, go through the process exactly that Mark designed for you to be learning from it, and achieve triple-digit performance or outperformance or super performance, however you define it. And that's something I can tell you none of them at least, that I talked to ever thought they could do that before they finally got the knowledge, the rules, the way to achieve that. And that's what this is all about.
And many of those people, and Bob, you talk to them. I don't talk to everybody, but Bob has personal conversations with everybody, thousands and thousands of people. So many of them were ready to quit and ready to give up. So many times they're ready to give up. And there's so many people that I've met Master Trader program and have interactions with that. There's, man, I was ready to give up, and thank God, I finally got it together. And some people have come to Master Trader program 4, 5, 6, 8 years in a row. And it's just great I love, because, I started off I'm not a natural at anything. Everything that I've done, people say, oh, you got these talents, you play the drums and you do these various things. I had to work my ass off for every single one of them. I was never a natural at anything. I was never good at anything like right out of the box. Everything always came very difficult for me. So I got a real soft spot for people who, struggle in the underdog and struggle in the beginning and then trudge through it and get to that result, and they earn it, and it's real, a real battle. I love that's what I love being part of. So anyway, we're going to run now, and we'll maybe see you again. And best wishes, good luck to everybody, and God bless.
All right. Thanks, Mark. Thank you for a great event, great week, and a great 52 hours together. And
was it really 52 hours?
Something like that.
Come on.
And you
No
can
wonder
raise
I'm
your
so
hand,
tired.
everybody, if you want to. Thank you for the notes. You can raise your hand. That's a little easier for us to see. But glad you enjoyed
And
it.
thank you, Mark Ritchie. I don't know if he signed off yet, but thank you so much.
Yeah.
I wish I could have got him more involved. I think in the future, when we do another program, if we change this a bit, I'll probably have Mark Ritchie a lot more involved, because he's really become just a great, so sort of like Mark and David are my right and left arm now, and they're just wonderful to have as co-instructors.
And obviously all of our private access members who are here, you get this every day. So, we'll see you tomorrow. And for those that are, I know a lot of questions have been asked to me. We told you, don't really want to talk about that during the workshop, but just send me a quick email. Let me know. And I'm happy to give you a call, talk over, or answer any questions you might have for that. And yeah, until next time, or this might've been the last time.
See you later. Bye-bye.
All right, guys. Bye-bye.
Recording stopped.